Mexico and Canada, 10% on China maybe, and Europe. What we've heard from Europe at the moment is that Europe's going to get it too, because of the trade surplus. So what that means in practice, I still don't know.
Okay, so Mexico is importing things from China, and that's bad, and it's also the immigration issues. Canada is Canada, and you can beat up on them because they're Canada, evidently, and they're close by. Colombia has to do the immigration. What are these being used for, and how these tariffs are being implemented are not consistent. So that's the reason why it is hard to come to any real conclusions across the board.
No, but we did get more color on actually what the president is thinking yesterday when he was talking to Republican congressmen and women. He was talking about the fact that also he wants to go after aluminum. He wants to go after copper because of the U.S. industrial base. He wants to make sure that we have all of this production in the United States. And then he also talked about the fact that you need tariffs to pay for tax cuts.
One man changed the conversation, Donald Trump. When he came into Washington, D.C., this was not a bipartisan issue. Donald Trump completely changed the conversation on this issue. And I think anyone who's saying, you know, he's not going to go through with some of this stuff, I pour some freezing cold water over those arguments big time. There's many reasons to go at China, a lack of reciprocity at Europe. It's been a protectionist trade bloc for a long, long time. Ask many countries and companies who've tried to deal with Europe and they'll give you a decent opinion on that. And as for Mexico, the southern border is a massive issue and wasn't the election, and he wants to do something about it.
I think that those are all completely correct takes, especially given the fact that the tariffs that were put on under the Trump era stayed on under the Biden administration. And frankly, there's a lot of bipartisan support for particularly levies on China. That is the reason why people are wondering why Denmark and Panama are in the crosshairs in Canada rather than, focusing on some of the other players.
This agreement has geostrategic importance, and I think we all understand that. So I agree it gets confusing when you try and throw everything against it.
I mean, it's like Gulf of America, Panama Canal, what's going on, Denmark, give us Greenland.
Panama Canal on the margins is about China. It's the fact that China has these ports there. They're controlling the canal. And Greenland is also not just about Canada, but also about Russia and how important the Arctic is to both these countries.
We'll see what the weekend brings. Equities right now on the S&P positive by close to 0.2%. Coming up through the next hour, we'll catch up with Tom Kennedy of JP Morgan as DeepSeek rattles global markets. Stacey Raskin of Bernstein on why the ensuing panic is likely overblown, and Lauren Goodwin of New York Life on why Goldilocks economy is the Fed's to lose. We begin this hour with stocks looking to recover. Tech bulls getting a brutal wake-up call as China's AI startup DeepSeek calls into question US tech leadership. Tom Kennedy of JP Morgan saying we are moving fast through the AI tech build-out, and volatility in the sector suggests adoption is set to accelerate. The winners, Main Street, big tech and China. The losers, AI infrastructure spending and US exceptionalism. Tom joins us now for more. Tom, good morning.
Good morning.
Certainly saw that play out yesterday. Is that a short to medium term call for you, or something you see playing out over the long term?
I think the big takeaway is that this movement through the AI adoption phase is happening a lot faster than we all thought. If you break it down, AI technology build out in 3 simple phases. One is proof of concept. OpenAI did that for us a couple years ago. Then we thought we were in this multi-year build out of the infrastructure to support adoption, and DeepSeek accelerates us through that. So now I think the incremental next 3-year look is you got to start to rotate more towards the application phase. And what that exactly looks like still remains to be seen, and we're experimenting and figuring out. VC community is very focused on robotics, but there's more to do. And from an investing perspective, that middle phase, shorter than we thought.
So from enablers to adopters, is there a preferential sector, a preference right now on a sector basis for you?
I think in the long way, you're going to get the big broadening out as the first takeaway. That US exceptionalism, you guys talked about it, these really consensus views walking into the year. We were US exceptionalists too, but this is a dent there for sure. So the broadening out to Main Street is a winner. Also potential for Europe. If you're going to get mass AI adoption, you'll get the productivity quickly. But our preferred sectors are still tech, industrials, utilities. This is a real question now. The intensity or the bottleneck in the infrastructure, maybe it eases a little bit, but if we're going to get adoption in AI a lot quicker, volume will really pick up quickly, and you're going to need the infrastructure there too. So we still like those sectors, again, at a price, and you just got a better price at them.
So basically you're not buying NVIDIA in the dip?
I think what you need, the infrastructure play is more than just chips, is the point. And it starts to circle around other topics you're talking about here too. Infrastructure build out for immigration, infrastructure build out for separation from China, and the picture is more ways to win in an infrastructure build. Still think the chip play is there, just don't think you're there at this moment at this price.
So there was something else you said about US exceptionalism.
Yeah.
Does this mean that you think the dollar is now going to weaken steadily from here?
No, we don't have a steadily weakening dollar, but the notion that AI innovation and AI exceptionalism in America is going to push the dollar higher, it's unlikely to be there. I think often we don't take the time to what causes AI, what causes US exceptionalism. It is tech innovation. We have the highest earning companies in America. It's immigration. People want to move to America. Trump is trying to do deportation, but over 200 years we've had net immigration to America. Common law system and a world where people are going to inflow capital here. There's many ways the US exceptionalism still works. And in America, the productivity output that we're getting from growth is just unmatched elsewhere.
I just want to understand what you believe about DeepSeek.
Yeah.
And then build on that. Do you believe that it was built for $5-6 million? Do you believe that they did this? And I'll quote NVIDIA directly in their statement that came out yesterday when NVIDIA turned around and said they leverage widely available models and compute that is fully export control compliant. Do you believe that it's fully export control compliant? Because I think what we believe really, I think, shapes your investment thesis beyond that. Because if you believe all that, it upends a lot of things. Do you believe all that?
I don't know what to believe on all of that. How exactly they did things, from what we're told, this was the final leg of the training was done with low cost, older chips, and leveraging prior best-in-class models. Now, the legality of that is not necessarily my concern. But what it does do is open up the opportunity now to scale AI much quicker than we thought. If I don't need the compute power, which was perceived to be a bottleneck, and I don't need the infrastructure, again, another perceived bottleneck, I can accelerate adoption. And that means AI brings to the masses and productivity can pick up. It benefits the players in the space that don't have the capacity to spend big on this.
So productivity picks up. What does that mean for your call on the economy more broadly?
It probably means there's upside skew to our view on growth, and there's downside skew to our view on inflation. All else equal. As we figure this out, though, that's a higher for longer world.
Just quickly then, yeah. That's what I'm thinking about. Do you think there's questions to be asked of Chairman Powell tomorrow?
Yeah. I mean, my two most important questions I'd want to sit there if I'm sitting there in the audience. Are we still meaningfully restrictive? What does that word meaningfully really mean? And can you cut rates in of itself if just inflation cools? Is that sufficient to cause the cuts? Those are the two questions I would ask. And maybe those are the only two questions we're actually going to get fun intelligence tomorrow.
There is this feeling that there could be an opportunity for Jerome Powell to open the chance for two-way risk, to either hike or cut at some point this year. Do you think that would be appropriate, given some of the technological transformation and some of the uncertainties?
No, I think it's quite unlikely he'll do that, is open the door to a hike.
But do you think he should?
No, I don't think he should. Mostly because the labor market is what matters the most in America. And momentum in the labor market is still cooling. Some could argue stabilizing, but it's very hard to argue that the labor market is retightening here, in my opinion. So the most indicators to look at, quits, hires, initial claims as a way for stabilizing and reacceleration. So until you see a tightening there, I don't see any reason to think that hikes are necessary.
Trump is currently, though, carrying out deportations, which could mean a tighter labor market, no?
Biggest risk to this call is that he will change the supply and demand dynamic in the labor market by reducing supply. In his first term, Trump ran on deportation in his first term. His deportation rate was about half that of Obama's. So using history as a guide, I do think there's a big risk here, just low probability that mass deportation changes this.
But if we were to see that, then would you consider potentially a hike has to be on the table?
Without question. I think it's hard to argue that the soft landing would have been possible without the immigration surge. So the opposite of that, Amory, would be a risk for sure.
Just going back to the very beginning, you said that yesterday you really did question some of the holdings that you have. Have you taken action on that? What are you waiting for to really decide whether you have to shift some of your views for 2025?
Yeah, I think the things that we talked about, winners and losers here, are Main Street's a winner. These big tech names, though, are not an obvious loser to me. The big tech hyperscalers, your top 5 names, they have access to the software and the interaction with their clients, so volume can actually sustain them. But from a loser perspective, we have to question the infrastructure build-out. And it's about chips, it's about power consumption, it's about power generation, it's about water, cooling, land. Like, that's what we're questioning right now.
These moves yesterday, we mentioned a few of them: pipeline operators, gas producers, utility providers. Lisa, there were huge moves in yesterday's session.
And it came off the heels of two things. First, that everyone was believing this story, that there was going to be an infinitive use, a sort of infinite amount of demand for energy and infrastructure as a result of artificial intelligence. But it also speaks to just how high valuations had gotten at a time where there were so many different stories that were converging.
There was a forecast for warmer weather in the mix as well. So I know it's hard to divide the two issues, but to see natural gas down as much as it was yesterday.
You think it's because we're not, 2 degrees Fahrenheit here in New York City?
Yeah, there was a weather element to the move we saw yesterday, particularly at the front month, in futures.
Sure.
But further out, the move you could see, that's all about energy use. And I think that just speaks to a part of this being good news. If it's real, it can be very good news.
It could be very good news because you couldn't have the adoption people were talking about with the energy that we had. So this actually is a positive and potentially disinflationary, which is the reason why we hope that Fed Chair Jay Powell addresses the NVIDIA question tomorrow at his Fed conference.
Mike McKee is going to ask questions in the news conference. We'll make it happen. Tom, it's good to see you. Appreciate it. Thank you, sir. Tom Kennedy there of JP Morgan Private Bank. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Scott Bessent has been confirmed as the next U.S. Treasury Secretary, winning a Senate vote 68-29. That included support from 15 Democrats. The former hedge fund manager's policy objectives include 3% GDP growth and a 3 million barrel per day increase in U.S. oil production. President Trump weighing in on the future of TikTok, saying Microsoft is interested in buying it. Microsoft declined to comment on any involvement in a possible deal. AI startup Perplexity has submitted a bid to merge with TikTok US, while billionaire Frank McCourt, former owner of the LA Dodgers, made a formal offer to buy the company earlier this month. Shares of JetBlue are tumbling 8.4% in the pre-market. It posted a fourth quarter loss per share of 21 cents. That is better than a loss of 31 cents that was estimated, but it was its cost outlook that was higher than expected. They're expecting it to rise 7% in 2025. The results are a setback for JetBlue, which had been focusing on reducing costs and improving flight operations. And that's your brief, John.
Danny, appreciate it. Thank you. More from Danny in about 30 minutes' time. Up next on the programme, The Morning Calls Plus, Stacey Raskin of Bernstein saying market hysteria over DeepSeek is likely overblown. That conversation up next.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I'm Maddie. People assume I'm a harmless old lady. Morning, y'all. Anybody want a muffin? Could I have some apple juice? It's my blood sugar.
I'll be right back.
What else is going on?
Nothing.
So I can tell by your body language, that's a lie.
What lie? I know we can win this. Best to listen to her in these moments.
Matlock returns CBS Thursday, 9/8 Central, part of CBS Winter Premieres.
To amuse you is my only wish.
Gladiator 2 is an absolute triumph, and now streaming on Paramount Plus.
The odds are against you.
The odds are always against me.
It's an epic spectacle and ferociously entertaining.
I'm just here for the game.
Strength and honor.
Strength and honor.
Gladiator 2, rated R, now streaming on Paramount Plus.
Poor baby. Got a cough and runny nose. Any ideas? Stop guessing. Just go. Walk into a nearby Novant Health Go Health Urgent Care today.
With the Paramount Plus with Showtime plan, you get next-level entertainment.
Let's go!
For everyone.
You're welcome.
The Paramount Plus with Showtime plan. Stream now.
Lots to get through as we approach the opening bell. 1 hour and 13 minutes away. Equity futures positive by just 0.2%. Let's get you some morning calls. First up, Morgan Stanley trimming its price target on Broadcom to 246, highlighting anxiety sparked by DeepSeek and a lack of short-term momentum. That stock bounces back by close to 4%. Your second call from Melius downgrading AMD to hold, citing increasing competition from Nvidia. That stock is just about unchanged. And finally, JP Morgan reiterating its overweight on that stock, saying AI efficiency gains shown by DeepSeek should drive further innovation. That stock is bouncing back by just 3% this morning. Let's stick with Nvidia, the chip maker erasing some of yesterday's losses after Chinese AI startup DeepSeek triggered a $589 billion round. Stacey Raxon of Bernstein weighing in on DeepSeek and writing the following: the models look fantastic, but we don't think they are miracles. And the resulting Twitterverse panic over the weekend seems overblown. Stacey joins us now for more. Stacey, welcome to the program. You addressed my first question in the line before the line I just read, but I want to repeat it and ask it to you just so our audience can really gauge where you're coming from. Do you believe that this cost around $5 million to build?
Of course it did, and frankly, like, it says so right in the papers. So I do think part of the problem with the stock and frankly with the whole space yesterday is that the headlines that kind of emerged from from the circus over the weekend was basically, oh my God, they built OpenAI for $5 million. It's clearly not true. They actually had a cluster. I got to say that there's actually two models. There's a base model that's called V3. And then there's a reasoning model called R1, which is the one that everybody's getting angsty over. V3 was chained on a cluster of fairly high-end NVIDIA GPUs. And they clearly had, tens or even potentially hundreds of millions of dollars of work that went into it to work on research and algorithms and everything. And they say right in the note, like, they don't include that. So, and this was just for the V3 model. They took the V3 model and did reinforcement learning and other things on it to develop R1, the reasoning model. They did not actually disclose what they did to train that reasoning model. So actually, I don't know how efficient it was to do that. I do know that the V3 model was very efficient, and there were some reasons for that, the structure of the model and other things. And as I said in the paragraph you just read, the models are all, they're actually really, really good. I don't want to discount that. They're fantastic models. The types of things that they did, though, are not miracles. They're not unknown to the rest of the AI community. And I mean, none of this was secret. I think their implementation was very clever because they're under some constraints due to the export controls. They've got to work very well and very efficiently with what they have. And I think they've got a bunch of really cracked engineers over there. They did a really good job. But I think in general, the whole thing, like the 5 million number and everything else, just caused a complete and total panic, which I do think was overblown. I really do.
And Stacey, we saw that across the board. It goes beyond the chip makers. We saw that from natural gas prices, energy providers. Sure. We saw it from pipeline companies as well. Stacey, there was this line from Nvidia yesterday that we keep bringing up on this program. We'd love your input on it. They say that it is fully export control compliant. And Stacey, I just wonder how we even know that. How would we know that?
Well, I don't know what they're running on now. The stuff that they trained V3 on is no longer export compliant. They supposedly trained it on a cluster of 2048 H800 chips. H800 it's a derivative of NVIDIA's H100, which is a very, very good chip. It's the exact same compute, slightly lower chip-to-chip bandwidth. Those parts are actually no longer export control illegal. The controls in October of 23 cut that off. I don't know what the new stuff is training. My interpretation of that statement was whatever they're doing, it's running on our stuff, or it can run on our stuff. Right? And this gets to a broader question, by the way, because the biggest question that people have, there's the near-term questions: is this going to cause a pause in shipments or orders or whatever? The longer-term question is: do we structurally need fewer GPUs and less compute in order to do this? And I am not a believer of that. Again, you compute growth, like installed compute in the world's data centers, even before AI was growing in leaps and bounds every year forever. I don't think we can ever have enough compute. People have been spouting it for the last like all over the place last day or two, but everybody's been talking about Jevons paradox, which is the idea that as costs come down, demand goes up, and demand goes up more than offsets the cost reductions. And remember, I'm a semiconductor guy, right? In semiconductors, costs got cut in half every 2 years for 50 years. it wasn't bad for semiconductors. It was really good. So I am maybe a little biased, but I am not of the opinion that we can ever really have too much compute. And I'm certainly not of the opinion that the compute that we do have was anywhere close to the limit of what we're going to need if AI is going to take on the potential that I think the industry thinks it can. And because of that, I think we actually need efficiency improvements. I think even on the GPU side, your performance has improved by more than 1,000x over the last 10 years, and that keeps going. NVIDIA said they want to improve by another 1,000,000x over the next 10 years. Well, these are the types of efficiency improvements that we need if we're going to get to where I think the industry wants to go.
That said, Stacey, it's going to be a bumpy path. And this is sort of the concern that a lot of people have, that essentially the big tech players that have been spending a significant amount of billions of dollars on GPUs from NVIDIA are going to feel pressured to ratchet that back a bit until they really understand what kind of models they need to really follow. There's a feeling that that is the near term that we're going to be looking at. Why do you disagree with that?
Yeah. Well, look, so the worries about like air pockets and digestions, these are not new worries, right? Those were concerns, you know, the last week and the month before and the year before. So this is not an unknown thing. I actually do think in the near term, you know, the biggest question for NVIDIA like this calendar year is their Blackwell ramp. And I would be shocked if anybody's canceling like Blackwell. What we saw even last week, all this was purchase intentions in general going up, not down. Meta raised their CapEx guide by a massive amount, right? We got the whole, you know, Stargate announcement. Even China announced like a 1 billion yuan, like $140 billion US dollar investment program in AI for the next 5 years. So we're seeing purchase intentions go up. And I'd be shocked if anybody's canceling like their Blackwell orders. Yeah. I do think people are going to be wondering what it means for next year as Rubin like starts to roll out, and are people going to rethink like their trajectory for Rubin. And again, that was a worry and a concern before. It's not new. We'll probably learn more about that in March. NVIDIA has their GTC event where we'll get more color on Rubin. We'll see partner announcements and all kinds of that. So we'll be able to gauge a little bit more in March. This probably is part of the reason with one of the issues with the stocks in the near term right now is there's going to be more uncertainty, clearly. And the thing is, even if you think that this is not an issue, like it's impossible to prove a negative, right? And so people are going to be free to worry. Like it may sit on the space for a while. Like absolutely, I'm not saying it won't. We'll have to see how things evolve as we go through the year. But I'm still pretty positive long term on the prospects. Is there near to medium term, you know, potential, you know, digestion risk or anything? There always is, but that was true before. I don't think that the idea of that is now like new because right. All of a sudden we've heard of DeepSeek.
Stacey, just quickly here, I am wondering whether this does indicate that China is much further along in some of its technological development and that potentially it could be a real competitor even in the chip space, which we know they're trying to make headway in.
Yeah. Well, see, this is one of the consequences of the export controls, and sometimes people do their best work when they're under constraints, right? And again, it's not like the Chinese are stupid, right? They have fantastic engineers and fantastic talent over there too. And, you know, and you can look at some of the things that they did in this case. Some of the things they did because they were constrained on the hardware that they could run on. They had to make choices that like ordinarily you maybe wouldn't want to do, but if you have no choice, you'll do them. We've seen this in other areas too, like just on process technology. They can't buy tools that can do leading edge. Huawei, however, is making chips on what's called 7 nanometer, which would be a process technology that would be banned. They're making them at SMIC, but they're using techniques to do that which are not going to be cost effective, and like they're things you would not want to do, but if you have no choice, you'll do them. We see the same thing on the semi-cap side. There are local semi-cap players that are gaining share in China because they have no choice, right? They have to buy them, so they will.
Stacey, I could talk to you all day. This was fantastic. Let's do it again soon. Thank you, sir. Stacey Raskin there of Bernstein. Up next, we'll get you some economic data and some reaction from Lauren Goodwin.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
A Chewy order is on the way for Radar, who hears everything. And that sound means Chewy is en route. Ear wipes, kibble, squeaky lamb. It's almost Chewy time.
Chewy.
And that's Echo,
Chewy.
whose favorite seed is also on the way. At prices Mom loves. Because 2 pets means twice the savings. For low prices and fast shipping, for life with pets, there's Chewy.
Whether you're looking to start the year in a new Subaru or Subaru certified pre-owned, Brad Anderson's Prestige Subaru has the Subaru for you for only $299 a month. $299 a month, all backed with lifetime oil changes.
It's a Subi thing.
How do we fit so much good inside Too Good Zero Sugar? When there's no sugar, no artificial sweeteners, and no lactose, there's plenty of room for protein-packed, fruity, creamy goodness. Because the world needs more good. Too Good.
Over 500,000 people with AFib have left blood thinners behind with Watchman, a safe one-time implant that reduces stroke risk and bleeding worry. For life. Watchman. It's one time for a lifetime.
This is Morgan. They never really thought about their credit scores until they had 8 roommates. Whoa, that's crowded. So Morgan used Credit Karma to help them improve their scores and started saving for a down payment. Then they moved back in with their original roommates until they could afford their own place. Thanks, Mom. That's how Morgan finally found the perfect home with the perfect little roommate to match. Intuit Credit Karma. Download the Money app where your hard work pays off.
Want the fastest working GLP-1? For half the price, Ro now offers FDA-approved weight loss injections cheaper, with results you can see faster. Lose 15% of your weight with the formula from Eli Lilly that hits not 1, but 2 hormones to curb hunger and nausea. Weight loss faster, confidence higher, price cheaper. See if you qualify at ro.co/TV.
Unexplained Zone, where truth seekers find answers.
What was it?
It's rotated.
Join the masters to follow the evidence.
That's proof positive.
Uncover the cover-ups.
The U.S. government know much more than they let us believe.
And never stop searching for the truth.
We are on full UFO hunter alert here.
Somebody died in this room.
Something to ponder. Unexplained Zone.
Have you ever wanted to whistle to the Andy Griffith Show? Now here's your chance. Don't miss a beat and watch the Andy Griffith Show on Pluto TV.
The open about 60 minutes away, some economic data, seconds away. Equity futures on the S&P just about positive by 1/3 of 1%. On the Nasdaq 100, up by 0.4. In the bond market, yields down across the curve in yesterday's session. Off the back of that risk aversion, the bond market received a bid. This morning, yields a little bit higher, up by 2 basis points on a 10-year 4.55 as we kick off the Fed's 2-day meeting down in Washington, D.C. With that economic data, let's say good morning to Mike McKee. Good morning, Mike.
Good morning, John. Well, you know, these are the numbers we want to see, but maybe not the month we want to see them. We want to see what impact the president's policies are having on business investment. But this is December data when Joe Biden was still president. Capital goods orders, non-defense ex-air, which is the number that really is a proxy for business spending, up 0.5% during the month after a 0.4 rise in November that had originally been 0.7. Durable goods headlines down 2.2, but that is usually heavily influenced by the Boeing and auto company results that we see. So we'll look at ex-autos, ex-transportation, up 0.3 after a 0.2 decline the month before, and capital goods shipments up 0.6, which would be good news for the GDP numbers in the fourth quarter. But right now, it's the capital goods orders, non-defense ex-aircraft that people care about, and that's up a strong 0.5% during the month. That's more than anticipated. We'll see if that continues into the Trump administration.
Mike, given the constant threat of tariffs, and I'm not sure how you separate the two administrations, given we were aware of the constant threat of tariffs back in December as well, would you expect some front-loading of some orders?
Yeah, you would. And you would think that perhaps people were trying to get some front loading in there. Now, we just got a revision to the capital goods orders. They were up 9/10 in November and 5/10 in December. So it does look like there is some front loading there. A study out from Chicago Booth School this morning suggests that consumers are doing the same thing. They were stocking up ahead of potential tariffs. So we may see a stronger than expected fourth quarter GDP number because people were worried about all of this.
Mike McKee, appreciate it, sir. We'll touch base with you on the Federal Reserve in a few moments' time. It's an intriguing way of doing stimulus, isn't it? The constant threat of tariffs and getting people to spend and front load some of these orders.
Yeah, although it does lose its potency after a while if you keep using it. But that does seem to be what a lot of people were talking about, that essentially retailers in particular were trying to get ahead of any tariffs by stockpiling. Let's just hope they didn't do the same things that they did during the pandemic when they got lots of Lululemon pants and sweatpants and they didn't get
Sounds
other
personal.
ones.
I'm not sure who you're
It's true.
talking
It
about,
actually
but it's
was.
not me.
Remember the retailers all had trouble because of the sweatpants.
So like finance pros started buying Lulu as well.
Yeah, well,
they started buying Lulu pants.
They're good pants.
I thought it was Vuori is the new thing.
To go with the vest.
Yeah.
You know, the Patagonia thing. Is that still a thing?
Did you see any men wearing leggings?
Too cold for the Midtown uniform. No, they don't wear leggings, Bramo. That's not what I'm suggesting.
It's the vest.
They wear the work.
It's the Midtown uniform,
right, okay.
yeah.
I know, but that changed.
Okay, anyway, all right. Let's turn back to the Federal Reserve. They are awake. The two-day meeting has started at 8:30 Eastern Time. Just getting confirmation of that across the Bloomberg terminal. Joining us now to discuss is Lauren Goodwin of New York Life. Lauren, it's good to see you.
Thanks for having me. I like Vuori pants for what it's worth.
I'm on board with the Vuori movement.
Totally agree. I really enjoy them.
So comfy.
So soft, so comfy, great colours too. We can talk about this another time. I don't know if Chairman Powell's into Vuori as well. What are you expecting from the Fed chair tomorrow?
Absolutely nothing. In fact, I think it's Chair Powell's express goal heading into this meeting to say as little as possible. The Fed is sitting on a perfect Goldilocks moment, and it's probably not going to last. But if you look at all across the markets, market financial conditions are good. The two-year yield's been sitting right on top of the Fed funds rate. Labor, inflation in pretty good balance. There's nothing they should do other than wait for more information, which includes information about how policy is going to impact their two mandates.
Which speaks to what you said a little bit earlier, which is probably not going to last. What do you think disrupts it?
Frankly, I don't know. There's just so many things that could disrupt it. If we look at the underlying sort of impulse of the economy, we've seen that the disinflationary process is pretty much intact. In fact, I really hate when this happens, but I agree with Max Kettner, who you had on the program earlier, and with disinflation being, I think, more important for the markets than has maybe been getting attention. You also have the labor market looking pretty strong. There's a lot of runway for the Fed to let growth move back closer to trend without doing a whole lot. But the types of disruptions that we could have are the policy pull forward. We're seeing not only potentially orders being pulled forward, but inflation expectations moving higher. These are the types of disruptions that are just sentiment right now, but as they transition into potentially reality over the next 3-6 months, that's very much in the Fed's timeline.
So do you think that the most underpriced reality is actually that the Fed would be cutting more, not less, even amid a pretty strong growth backdrop?
I don't know that that's the case. Again, the underlying sort of impulse of the economy has been for this gradual disinflation, but inflation is still sticky, and the fact that market rates are still sticky is telling me that investors are very concerned about what that future glide path looks like. And so I take the Fed and the market at its word, where a couple 25 basis point cuts this year is probably a reasonable base case when you're looking at a statement of economic projection that says, look, growth is going to come down a little bit closer to trend, but inflation actually maybe not so much over the course of this year.
So tomorrow when we talk about the Fed meeting, we're going to be talking about inflation, we're going to be talking about rate cuts, but really what everyone's going to want to know is how politically influenced is the Federal Reserve, what's Donald Trump going to be saying, how much is there going to be some sort of shadow Fed later this year that could undermine the Fed chair? How much does that factor into your base case for markets at a time where we know that's all going to happen to some degree or another?
So it doesn't factor into our asset allocation at all, because it's not something that at the end of the day I'm worried about. But I do think that it's going to be very much a part of the conversation, and I think it's an important conversation. The line that the Fed is going to have to walk here, because there is going to be, as we've already seen, this attempt at interference, the line that they're going to have to walk is that we have seen this movie before. We have not only the period in the 70s and 80s, but also the post-war period where we've had double peaks in inflation, and interference in central bank activity was a big part of that double peak in inflation. They've seen that movie before, and they don't want to play into that movie again. That's a message that we've seen Chair Powell iterate in really strong and frankly fun and funny language at press conferences before, but they're going to have to keep doing it. I think it's going to continue to be a part of the conversation.
But didn't he open the door to that himself when in November he said, we don't assume, we don't guess, we don't speculate, and then they assumed, they guessed, they speculated?
It's a really good point, and I think at the end of the day, this just comes down to these are economists, or in Chair Powell's place, not a PhD economist sitting around looking at data and conditions, just the same as all of us, where you don't want to make bold assumptions about policy or about the trajectory of the economy when you don't have good information, but you have to because you're trying to sort of shield the business cycle from that potential interference.
But not everyone on the committee assumed. So then you're left a little bit of uncertainty of trying to understand who is approaching what the economy is doing now, what the economy might do in the future. Isn't that in itself the Fed being uncertain?
It is. And so then from an asset allocation perspective, I think some of the lessons or sort of through lines that we can take from it is that we are dealing with a really quite constructive economic backdrop with a lot of uncertainty. And I think that one of the reasons we've seen such resilience in the markets, including with market-related uncertainty like in the last 24 hours, is because of that economic resilience. And when you're thinking about how then to allocate a portfolio, we can feel pretty confident in areas of the market that haven't been discussed very much over the last couple of days, like credit. If you have a Federal Reserve who is on balance in the process of cutting over the course of this year, even if it's not very much, an economy that's strong, and an impulse actually that's looking quite positive at the moment, that's an environment where we think staying invested is more valuable than not.
It was easy to say that we don't assume, guess and speculate back in November when you didn't have to put out forecasts. Then in December you had to put out forecasts. The very fact they don't have to this time around, it makes this a little bit more easier, doesn't it, tomorrow afternoon?
They don't have to quantify it, and they don't have to give transparency about who is assuming and really planning to incorporate some of what we've heard so far. That said, there is this feeling that's looming over the Fed, which is that Donald Trump is going to call them up, and he's going to tweet at them, and he's going to exit them, and he's going to basically say, you know, guys, rates have to go down, and then they have to really dovetail this very sensitive kind of historical lesson, maybe at a time of potential transition.
Some commentary from the strategist Donald Trump around 2:35 Eastern would be perfect.
You think so?
In the news conference.
Oh, so excuse me.
Just
Mr.
perfect time. Exactly.
Yes. Yeah,
exactly.
I think he will be truthing live.
Lauren, it's good to see you. Appreciate it. Lauren Goodwin there of New York Life. Mike McKee will be in that room in the news conference. Mike, what's on the agenda for Chairman Powell tomorrow?
Well, I think Lauren put her finger on it. He's going to try to say as little as possible, make no news at all. You know there's going to be a question or two on Donald Trump coming. The issue for reporters is how do you ask something when you already know that he's not going to answer? That we sort of have to get him on the record saying we don't know what's going to happen, so we're not going to make any assumptions. But right now, we also know that's what he's going to say. So I'm not sure we get a whole lot of clarity there. And as far as what they do going forward, he'll dodge all of that as well, saying we're going to wait and see what happens. So unfortunately for the markets, they're probably not going to get a lot of direction out of this.
Mike McKee, we can only hope. Good luck tomorrow. Michael McKee heading down to Washington for the Federal Reserve's meeting. Look out for that news conference and, of course, special coverage from us that starts at about 1:30 Eastern Time. The decision 30 minutes after that, and the news conference begins 30 minutes later.
I feel like every single person who's coming on is basically saying, don't have to watch it. You can just turn it off. And so I really am curious, if the bar is so low for the Fed chair to basically say nothing, will he embrace that bar, or will he mess up? Basically, will he do nothing, or will he say something that he thinks or feels, and that's going to be a negative?
Matt Diesel can answer that, of Maryland Bank of America Private Bank. Matt, it's good to see you.
Good to see you, John.
How low is the bar for Chairman Powell?
That was a great point Lisa was making. The bar is pretty low, and again, we're not expecting much from the meeting. We're expecting steady as she goes, watch the data, but that does leave the possibility that people do get surprised. Chair Powell had said rates were meaningfully restrictive at the last meeting on December 18th. At that point, the 10-year is in that 4.25 to 4.30 range. We just recently got 55 basis points higher than that. So we thought that was meaningfully restrictive. How does he feel about the 10-year that much higher? So it's always possible he says something that actually makes the market take a dovish implication from that.
Do you believe we are meaningfully restrictive?
I don't think we're meaningfully restrictive. I think the idea of a neutral Fed funds rate divorced from the economic environments doesn't make a lot of sense. Obviously, we have deficits right now about 7% of GDP. The usual deficit is 2 to 3% of GDP. You can't have a deficit 2 to 3 times the normal level and say it's the same restrictive Fed funds rate. So 4% with a 7% deficit is probably a lot closer to neutral. If you had a 2 to 3% deficit, sure, then maybe 2 to 3% Fed funds rate, but it has to be calibrated relative to the economic environment. We think the restrictive, but meaningfully restrictive, we'd probably fade that a little bit.
At the same time, haven't they been kind of given a pass by the fact that we just saw this rally and concerns about NVIDIA? So, oh yeah, we don't have to really be a problem. Like, we don't have to take a look at the long end that much. And, you know, there's something to see here. Can't they kind of punt on that?
I think if the market volatility continues like what we saw the last day, possibly, but I don't think they're going to look too much into one day, too much into one company. And again, I do think the 10-year is going to be very important for them because the Fed funds rate doesn't affect the economy as much as longer rates. And obviously, how they talk about the Fed funds rate, what they expect for the Fed funds rate, is what really drives long rates higher. So we believe that they're probably on hold for the rest of this year, but the risk of that would be another cut or two, which is what the market believes.
As a market participant, as someone who actually has to invest, how much do you care about the tit for tat that is inevitable between Donald Trump and Fed Chair Jay Powell?
Well, I think the idea of central bank independence is important. That's been in place for a while. But we have to take a step back. There's nothing new under the sun. And politicians and central banks having different points of view always makes sense. You go back in financial reserve history, obviously there were times that there was a lot of discussions between the central bank and between the administration. LBJ taking a Fed chair down to Texas, had gotten very vocal with them, backed them up against the wall, kind of poked them in the chest. So there's definitely times where there is some disagreement, I will say, between Fed chairs and the administration. We believe, as Chair Powell has said, the Fed is independent. They will do what they think makes sense for the economy, and we think that'll be the right way to move forward.
How difficult might it be, though, when you start really hearing more news reports about Trump coalescing his ideas and thinking behind the next Fed chair? We already know some lists, potentially, that he might appoint for 2026, but by mid-year, you might hear more about that one individual, and that person speaks. They're going to probably carry more weight when it comes to the market.
Well, I think the structure of the Fed is set up so they have different governors, different terms, people rolling over at different points. And so it's not that unusual to have a Fed chair change during administration. So we're not overly concerned about that. And again, while Chair Powell is quite important, he's one member of a broad committee. And just changing one chairman, we don't think will have a major impact with everyone at the Fed and the entire committee, which all have a very important voice and all have votes.
When it comes to what we saw over the past 24 hours, with basically tech stocks just getting absolutely hammered, $600 billion wiped out for NVIDIA, you still say the U.S. best game in town in terms of growth. Do you still think that U.S. exceptional reigns?
Yes, we do believe, especially in terms of asset allocation and economic growth, the U.S. is the place to be right now. Obviously, we've seen a number of high flyers, particularly in the tech sector, over the last couple of years. If you strip out those valuations from the market, the rest of the best, as we call them, valuations are not extended there. So we're not overly concerned about some of the high flyers not flying so high. We see the market broadening out. We saw, it's very too early to call it a trend, but we've seen the equal weight of the S&P start to outperform, and that's kind of our belief. We've tilted more diversified, making sure we have other sectors, not getting too overweight tech, so we don't mind a little volatility there. That's to be expected. And again, it's going to be a chop and grind this year. We don't expect valuations to extend in the equity market. We believe the equity market will follow earnings. Our earnings trajectory is positive. Again, the deficit picture is a big part of that story, and so we're not overly concerned about volatility in some sectors. The rest of the market is appropriately valued, we think, to deliver reasonable equity returns this year.
So 60-40 is sort of back with pretty middling returns.
We've never thought 60-40 was gone. We like 60-40. We do feel better about 60-40 now because it's not that difficult. Don't tell anyone else, but being a fixed income strategist is not that difficult, right? Right now, you look at the ag. You can get 5% on high-quality fixed income. That means year in and year out, you're going to get 5%. That's how fixed income really diversifies. Steady, reliable yield year in and year out. But let's look at the risk-reward. Let's say we're wrong. The Fed's not only done cutting. Let's say they hike. Not 1, not 2, not 3, not 4. Let's say they hike 5 times, right? Let's say the curve moves up in parallel fashion. We can all agree that's a pretty conservative assumption. In that instance, on the ag, you'll basically get, over the next year or so, only a negative 2.5% total return. On the flip side, if rates move 125 basis points lower, you're going to earn approximately 13%. The risk reward when yields are higher are so much more favorable for a diversified investor. That was not the case when the 10-year was 1%. The symmetry is pretty much 1 for 1. So we feel this is a good place to extend out your investment cash, to get longer fixed income in terms of duration. We're more favorable in duration now. We're still neutral, we're slightly long. But at these levels, if you got slightly longer here and then added again above 5%, we feel tactically that will work, but you don't have to. You could just be 60-40, you can be strategic. Fixed income will do a very good job of giving you additional returns here.
So what is the one thing that could potentially upend your view?
The major change would be a sustained increase in inflation. Right now, the Fed wants a better labor market. They like the stronger job market. That's not a problem for them. Our belief, and we believe the Fed's consensus belief, is that tariffs are not overall inflationary. They'll lead to a one-time bump upwards in prices, but people change their behavior. I mean, tariff's just a tax. What do you get when you tax something? You get less of it. So consumers will probably adjust. As long as that's the case, we feel we're in the right range. It would take a really sustained increase in inflation to really change the Fed trajectory. And without the Fed purchasing bonds from the government and financing those deficits, we think any major inflationary impulse is quite unlikely.
Hey, Matt, it's good to see you and catch up with you as always. Matt Dizok there of Merrill and Bank of America Private Bank. On fixed income there, as BMO's Ian Lincoln said yesterday, still need to resolve core uncertainties around the policy of the new administration.
Yeah, and the ramifications of them. And with the tariff policy, the idea of Scott Bessent talking about 2.5%, just low grade across the board. Some people think that's actually more inflationary because it wouldn't restrict some of the consumption. It wouldn't increase costs enough to restrict consumption, but it would bump prices up, especially at a time where consumers have gotten kind of used to fungible prices at any given time.
You've got to understand what's happening elsewhere, the tit for tat, what happens with the FX channel. Nothing is obvious about any of this. 2.5 might be seen as a starting point, might be seen as the end point. Again, nothing is obvious about that either.
How many times do I have to say I have no clue this morning?
I don't think anyone does.
Yeah, I know.
I don't think anyone
I think you're
does.
right. I think you're right.
Let's give you an update on stories elsewhere this morning. With your Bloomberg brief, let's cross over to someone who knows everything. Danny Berger. Hey, Danny.
That might be just a slight exaggeration, John. All right, well, Israeli Prime Minister Benjamin Netanyahu is planning to visit Washington next week to meet with President Trump. People familiar say Netanyahu wants to speak to Trump about maintaining the ceasefire in Gaza. Israeli media is reporting that Trump's Middle East envoy, Steve Witkoff, is expected to travel to Israel this week to discuss longer-term solutions to regional conflicts. Billionaire investor Ray Dalio says today's AI frenzy looks like the dot-com surge of the new millennium. The Bridgewater Associates founder telling the FT pricing has got to levels which are high at the same time as there's an interest rate risk, and that combination could prick the bubble. The NASDAQ 100 doubled in 1999 before falling 80% in 2002. The same index has again doubled since the start of 2023. Google Map users in the U.S. will soon notice a change in their app. The Gulf of Mexico will be named to the Gulf of America. The change will take place once official government sources are updated to reflect that order by President Donald Trump last week. The Gulf of Mexico name will remain in use in the Mexican versions of Google Maps, and international users will see both names displayed side by side. And that's your brief, John.
Danny, thanks. Thanks for this morning. Appreciate it. Up next on the programme, we'll set you up for the day ahead, bring you the calendar for the next couple of days. Big 24 hours coming up. Federal Reserve decision tomorrow afternoon. After that, numbers from Microsoft, Meta and Tesla. From New York City, this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
A Chewy pharmacy order is on the way for Summit, who loves fresh air. Like, loves fresh air. But fresh air is full of stuff. Fleas, ticks, allergens. So her parents use Chewy for all her prescriptions. Fast delivery means they never miss a dose. And great prices mean more funds for more fun. For quality meds and great prices, for life with pets, there's Chewy.
Whether you're looking to start the year in a new Subaru or Subaru certified pre-owned, Brad Anderson's Prestige Subaru has the Subaru for you. Drive today with 0 APR for 72 months, all backed with lifetime oil changes.
It's a Subi thing.
We've got the goods. The delicious tasting, less sugar, no artificial sweeteners, protein-packed kind of goods. Too good, because the world needs more good.
We are people living with AFib. And over 500,000 of us have left blood thinners behind for life. We've cut our stroke risk and said goodbye to our bleeding worry with the Watchman implant. We may be getting older, but we've never squeezed more out of life. And we are just getting started. Join us at Watchman.com. Watchman, it's one time for a lifetime.
Nissan Rogue has been named a Consumer Guide Best Buy for 11 years in a row. Drive the award-winning Nissan Rogue today.
This is Carl. He never really thought much of his credit scores. Well, until he got Credit Karma and used his scores to move on up. By putting in the work to improve his scores, he got access to a better credit card. And that sofa she liked. Ooh, is that Saffron Sunrise? And when it came time to buy a home of his own, Credit Karma helped him take things to the next level. Just in time. Intuit Credit Karma. Download the Money app where your hard work pays off.
Equity futures barely positive, up 0.1% on the S&P 500. On the Nasdaq, after yesterday's losses, the biggest one-day loss of the year so far on the Nasdaq 100. We're positive by just 0.2%, 36 minutes away from the opening bell. With your morning movers, it's Manus Cranny. Hey, Manus.
Jonathan, and the add back on that NVIDIA story of the $589 billion loss yesterday has dissipated through the morning. At one junction, when we came in and started Bloomberg Brief, it was up 5%. We've given a little bit back. This is about reappraising the margin outlook for NVIDIA. By the way, Parimi Wealth will be with us this morning. He sold $110 put options. He's bullish on the market. It's overdone. Quick look at the next stock. We've got General Motors. I mean, they've had their numbers, the operating profit. They've had a boost from the US and from China. They're making some pretty brave assumptions. They're saying the first form of guidance for 2025, we're going to earn between 13.7 and 15.7 for this year. But that's not assuming the tariffs are in there. I'll leave you with a look at JetBlue. We have a problem, a supply problem. Capacity constraints, fewer flights, and in the first quarter, a potential loss of between 0.5% to a 3.5% gain. That is way under the estimates. This is about capacity constraint in airlines writ large. Jonathan.
They're having a difficult time, that's for sure. JetBlue down by close to 9%. Manus, thank you. Big 24 hours coming up. Sprinkle of economic data a little bit later on this morning. At 10 a.m. we get the Conference Board Consumer Confidence. Look out for that. Then tomorrow it all starts. 2 p.m. Fed rate decision, followed by the news conference at 2:30. Then earnings from Microsoft, Meta, Tesla Thursday. An ECB rate decision plus results from Apple. And then on Friday, PCE. Is that enough for you? What are 48 hours coming up?
My question is, what's the most important thing? And I think everyone will agree right now, going into that without knowing any more information, it will be the tech earnings. Very much Apple, Meta, Microsoft. How much do we get a sense of how much they're adjusting their spend out on capital expenditures based on some of the advancements that we've seen?
One thing missing there as well, February 1.
Yeah.
February 1 and trade.
That's what I was going to say. On Saturday, there is a potential that we will get tariffs on Canada, Mexico, or China. We might not, but we could. That's basically as soon as it can come.
So the weekend is really a continuation of the trading week, because that could be a big weekend.
We work all the time now.
Are you trying to basically dampen anything?
I don't want 24/7
Hold on a second. Am I just going to say?
No, I'm very against
Are you
that.
going to say, not let's get you to the weekend, let's get you to February 1st. Well, we'll see what actually happens.
Very against 24/7
Okay, but maybe
markets,
that's where we're going to be.
Let's get you to the weekend tomorrow. Julian Emmanuel of Evercore, Lisa Shannon of Morgan Stanley, Nikolai Tangut of Deutsche Bank, look out for that, and a former Kansas City Fed President, Esther George. How many days until the weekend? It's only Tuesday.
It's only Tuesday.
Wow. Monday was brutal. brutal, wasn't it? Like a trading week at a single day. A month.
Yes, that's true.
A year. From New York, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Amelia, turn off alarm. Amelia, weather?
70 degrees and sunny today.
Amelia, unlock the door.
I'm afraid I can't do that, Jen.
Why not?
Did you forget something?
My protein shake.
The future isn't scary. Not investing in it is.
You're so dramatic, Amelia.
Bye, Jen.
100 innovative companies, one ETF. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
66% of CIOs deploy automation for productivity. To scale successfully, companies need automated tools for finance, HR, marketing, and other business systems that can grow with them. Intuit Enterprise Suite Automation enables data to flow seamlessly.
Growing businesses can benefit from AI and automation to streamline complexities in operations and improve visibility into performance. With Intuit Enterprise Suite, leaders can focus on what matters most, which is growing their business.
Stamps.com gives you a lot of flexibility. Print postage and schedule free carrier pickups on your time. Start your risk-free trial today at Stamps.com.
Whether you're looking to start the year in a new Subaru or Subaru Certified Pre-Owned, Fred Anderson's Prestige Subaru has the Subaru for you. Drive today with 0 APR for 72 months. All backed with lifetime oil changes.
It's a Subi thing.
Life with AFib can mean a lifetime of blood thinners. And if you're troubled by falls and bleeds, worry follows you everywhere. Over 500,000 people have left blood thinners behind with Watchman. Watchman is a safe, minimally invasive, one-time implant that reduces stroke risk and bleeding worry for life. Watchman, it's one time for a lifetime.
This is Morgan. They never really thought about their credit scores until they had 8 roommates. Whew, that's crowded. So Morgan used Credit Karma to help them improve their scores and started saving for a down payment. Then they moved back in with their original roommates until they could afford their own place. Thanks, Mom. That's how Morgan finally found the perfect home with the perfect little roommate to match. Intuit Credit Karma. Download the Money app where your hard work pays off.
On Face the Nation, you try to separate the noise from the news. You need to be able to have an actual conversation.
Watch me fumble. Trying to bounce back after a brutal Monday. 30 minutes until the start of trading, I'm Katie Greifeld.
And I'm Scarlett Fu. Matt Miller and Shonali Basak are off for the day. Bloomberg Open Interest starts right now.
Coming up, that $1 trillion wipeout driven by DeepSeek pauses. But shocker, Black Swan author Nassim Taleb warns that yesterday's sell-off just a taste of what's to come. And even still, that market faces a big earnings test this week, with investors hoping and praying that results from the Magnificent Seven will restore confidence in the tech sector. Plus, we have that dollar on the rise after President Trump wants to impose across-the-board tariffs that are, quote, much bigger than the 2.5% that were just floated by Treasury Secretary Scott Bessent. All of that and more coming up. But let's take a look at where these markets are trading. You did see a lift pre-market, and we're trying to hold on here, but those gains coming in a little bit on the S&P 500, up about 0.1%. The NASDAQ 100, we had been looking at pre-market gains of about 0.4%. That's faded a little bit, but still green on the screen. Going to be really fascinating to see how that one develops. And then you train your eyes on the bond market right now. We saw that big rally come in yesterday as investors sought a haven anywhere they could find it. Not so much today. Yields rising a little bit, 2 basis points on your 10-year yield, but we're still below 460.
Yeah, a little bit of a give back there, and that's kind of the theme with some individual stocks that we're watching too. Nvidia shares inching higher after yesterday's historic sell-off prompted by concerns around AI competition from China. General Motors giving a better than expected profit outlook for the year. However, that guidance does not account for tariffs. Still, GM says it has a playbook if Trump adds tariffs to goods from Mexico and Canada. And shares of JetBlue plunging because its full year costs are higher than expected. The airline says it expects a drop in flights for this quarter. Katie, a stark contrast to what we heard from Delta and American.
Yeah, absolutely. Looking forward to digging into those results as well as Boeing a little bit later in the show. But let's talk a little bit about what's going on in these markets, because it was a brutal day across the board from the opening bell to when you were on air at the close, Scarlett. And it's interesting. Usually we meet in the middle of the day on Mondays for ETF IQ. So let's talk about the flows.
Okay.
They were staggering. You take a look at the Qs, of course, that big tech ETF taking in $4.3 billion, biggest one-day inflow since 2021. So clearly, amid everything we saw yesterday when it comes to that sell-off, some investors saw opportunity to buy this dip.
Yeah, definitely people were buying the dip, and definitely people were taking the opportunity to buy up on what they considered safe havens. Consumer staples, healthcare stocks all did very well. Even within the tech space, you saw Meta climb to a record high because it's seen as a beneficiary of cheaper AI, and also its Llama AI model is also open source in the same way that DeepSeek is.
Yeah, it was fascinating. You saw Meta and Apple end yesterday green. Both of those companies report this week, so it should be a lot of fun. But let's start this show with politics, because we heard a lot from President Donald Trump yesterday saying that he wants to impose broad tariffs that are, quote, much bigger than 2.5%. Of course, that was the number floated by just confirmed Treasury Secretary Scott Bessent. And this really is just the latest signal in how Trump is preparing to reshape the entire U.S. supply chain. So let's break it down now with Anne-Marie Hordern. She is Bloomberg's chief political correspondent, also the co-host of Surveillance, fresh from the other set. So he talked about a lot. Of course, we heard about DeepSeek, we heard about tariffs and a few other things in there as well. I think we got to TikTok.
Tax cuts, deregulation, TikTok, yeah.
So pick your poison. I mean, it feels like we should start with tariffs, as that's what seems to be making its way through the currency market right now.
Definitely, and also the fact that he did float that February 1st, which is Saturday, could be the first time we see these tariffs enacted on Canada, Mexico, and China. On China, it would be 10%. On Canada, Mexico, it would be 25%. But it's interesting because after he talked about tariffs as well in this speech in Florida, which he talked about aluminum and copper and semiconductors and pharmaceuticals, he was asked on Air Force One about this Financial Times article that allegedly the just confirmed Treasury Secretary Scott Bessent is floating this idea of a gradual, almost forward guidance, 2.5%. Now, this does ring true to Bessent's thinking, because in August, he told us on Surveillance that potentially that would be the way to look at tariffs. 2.5% for 2 years. Xi Jinping, tell us when it starts to bite before you get to that 60% on the campaign trail Trump was talking about. And when Trump was asked about this, he said, no, actually, it's going to be bigger. And then he said, I have the idea and the number in my head, but I'm not ready to set it. So it's kind of like, he said at the debate, I have concepts of a plan. Still is being worked out. And I think that's probably appropriate in the sense that this is only the second week of this administration. He doesn't even have his commerce chief in place. We're still waiting for his entire cabinet to get confirmed. But I think what is so important about it is potentially you'll hear more about this, because Saturday is that date he at least marked on the calendar.
Also, not going into detail works for him, right? Because the broader the threat, the broader the concessions he might be able to ring as well.
And we saw that over the weekend with Colombia.
Absolutely. Something else that is not getting perhaps as much attention is how Trump paused all federal spending on loans and grants. And this seems to apply to things like non-government organizations, foreign aid, DEI. I mean, it's the whole gamut, really.
I think a lot of this is that this administration promised to come in and review what had been done over the past 4 years. I think that's what they're doing now, putting a pause on everything till they get all their people in place. And then potentially we could see some more of these loans and grants come back out. But yeah, at the moment, all of that is stopped. But potentially, I would say, just watch this space.
All right, Anne-Marie, that's a good place to leave it. Great to see you. Of course, that is Bloomberg's Anne-Marie Hordern, our chief political correspondent. And let's broaden out this conversation now with Emily Bowersock-Hill. She is CEO and founding partner of Bowersock Capital. And what we also heard from President Donald Trump yesterday was that the release of DeepSeek AI should be a wake-up call for American tech companies. And you write in your notes that this AI reckoning that we saw on Monday was overdue. to. If that's the case, do you think that we're through it, or is there still more pain to come?
Well, frankly, I'm still processing it. I think if China has truly learned to develop a powerful AI model with a fraction of the budget and much less infrastructure, that would be a pretty significant shock. You know, I think I heard out of the corner of my ear on Bloomberg yesterday, and I apologize, I don't remember the person's name, but he was talking about it would be like a big pharma company who had spent billions on R&D, suddenly having a competitor come along and manufacture the same drug at a fraction of the cost. But at this time, we have no patents. So I do think this is something that the market's gonna have to digest. You know, I hope it's a speed bump. Certainly, we're still going to get a significant productivity boost, in my opinion, from AI. So it's really the chip makers and the equipment makers that are going to struggle. But I think the market's going to have to process this.
Yeah, I appreciate your being candid about that, about something that the market needs to process. It's not just a one-day knee-jerk reaction. How does this color your interpretation of the earnings that we're going to get this week from the big tech companies, from Meta to Microsoft to Tesla?
Well, I think there's going to be even more scrutiny on them. You know, with the exception of Apple, we expect big tech earnings this week to fall in line with expectations. And, you know, before yesterday, Apple had dropped 11% year to date. We saw both Meta and Apple actually up yesterday, as you pointed out earlier in this show. So, you know, I think given the high valuations of mega cap tech, I would certainly not expect a price boost from earnings unless we see, you know, some kind of significant earnings surprise. I think we just have to hope that we get through without some sort of unexpected negative news.
Can we talk a little bit more about Apple? So you're expecting big tech earnings fall in line with the exception of Apple. Is that to the upside or the downside for Apple? Because Apple certainly has had a brutal start to 2025.
Brutal. I would expect if there's a surprise, it's probably going to be a downside surprise just because of all the issues they have with China and competition from various Chinese smartphone producers. And so I think, you know, Apple has been seen as a defensive stock, and it's the go-to when, you know, people are scared, as we saw yesterday. So I think we could get a negative surprise from Apple. But I think, you know, again, some of that is baked in already. That's why Apple was down over 10% year to date. Is that's known.
That's known, yeah. So these are all things that are going to play out over time. And I think about how General Motors gave an outlook that was not incorporating the potential tariffs. And I guess they can't really say anything because nothing has been explicitly pledged just yet. How helpful is it to hear company executives talk about the known unknowns, but not be able to put any fine numbers to it?
You know, I think it's tough. Global stock markets have not yet priced in the impact of tariffs, in our opinion, and that's because the policy particulars are still unclear. And also, it's extremely complex. You know, we haven't really seen the market react to tariff threats. We've seen reactions in the currency markets. We've seen some reaction in the bond market. But I think, frankly, at this point, until we have some more specific policies, it's very difficult. To be candid about that. Who knows?
All right, Emily Bowersock, we are having some communication issues here. Let's leave it right there right now with Emily Bowersock joining us here on The Market, CEO and founding partner of Bowersock Capital. Let's get a look at some of the individual stocks that are currently moving ahead of the opening bell right now and bring in Bloomberg's Isabel Lee. Isabel, a lot of earnings that we got this morning.
Definitely a lot. And looking at Boeing, so shares are now edging flat, but this is interesting because we have the CEO, Kelly Ortberg, saying a recovery plan is in place. And this comes after the company posted its 6th consecutive annual loss. So we know that Boeing burned through some $14 billion of free cash during a really challenging year. It's been marked by near catastrophes, leadership turmoil, federal investigations, and lengthy worker strike. The CEO actually was a longtime aerospace executive who Boeing hired out of retirement over the summer. And it's made progress, but that will take time, of course. In Royal Caribbean, it's up around 4.5%, at least in pre-market trading. The company reported reported adjusted EPS that beat analyst estimates and extended its streak of quarterly profit. So the firm said its busiest season is looking good. It's called wave season. And wave season is when cruise promotions peak, and that's during the first quarter. So people are definitely back cruising, and they also have an initial order of 10 river ships. So that's a luxury cruise. That's their new thing. So that might catch some excitement. And lastly, we're ending on a slightly down to flat note. AMD is edging a little bit lower, down by 0.03%. The stock is downgraded to hold at Melius Research. The company sees earning risks given competition with NVIDIA. And the firm has a 2-year price target of $129 for the stock, but that's down from $160. So that's 3 I'm looking at, Scarlett and Katie.
All right, Isabel, great roundup as always. We'll see you a little bit later in the show. And let's take a look at these markets right now. Less than 20 minutes ago until the bells ring. You can see still some green on the screen, but even from when we checked markets 10 minutes ago, some of those gains coming in right now. The S&P 500, the NASDAQ 100 up about 0.1%. The Russell 2000 actually lower on the day. It was your relative outperformer yesterday, but that even is a generous term given how brutal the sell-off was yesterday. And Scarlett, it was interesting. I mean, this time yesterday, we were talking about how there's a lot of daylight between the open and the close, and that maybe we could see a rebound by the end of the day, but you were on the close and it didn't happen.
Well, we did see a rebound in things like the Dow Jones Industrial Average, which is price weighted, so it's not as accurate a reflection of the overall market.
On the show.
I noticed that it wasn't on your market, Jack. But it's interesting that today, when you look at futures, Dow futures are lower, so a little bit of a reversal from yesterday's trade. Worth mentioning as well that today is day 1 of the FOMC. We're not going to get anything out of them today, but even tomorrow when they come out with their decision, the decision is no change in interest rates. It's how Jay Powell talks about inflation that matters.
That's true. That's true. Of course, there's what happens at 2 p.m. and then the real trade comes through once Jay Powell actually starts speaking. Much more ahead, though. We're going to talk about NVIDIA bouncing back in pre-market trading, but still a ways to go to recover from yesterday's DeepSeek-fueled drop. It fell 17% yesterday alone. More next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This winter, let Fred Anderson's Prestige Subaru keep your Subaru adventure ready and your furry friends happy. During our winter service event, get a complimentary road-to-roof inspection and save up to $75. Show your pet some love. Take 15% off pet accessories or get $5 off any service when you add their photo to our Pet Wall of Fame. Plus, with Subaru Express service, no appointment necessary. Schedule today at PrestigeSubaru.com.
It's a Subi thing.
We are living with AFib, and over 500,000 of us have left blood thinners behind for life. We've cut our stroke risk and said goodbye to our bleeding worry with the Watchman implant. Watchman, it's one time for a lifetime.
Delicious multi-meal cereal checks every box. Big bag, big value. Big flavor. Big smiles. They savor, you save.
From chasing leads to dissecting clues.
There's something I think you ought to see.
For these detectives, the hunt is always on.
Would you mind pointing that gun down?
They'll do whatever it takes to close the case.
I can promise you one thing, the truth.
Has anyone seen anything unusual?
So I've got better things to do with me time, like actually catching criminals.
Catch the best of British crime drama on BritBox Mysteries.
I'm going to be on television.
Three's Company on Pluto TV has 3 times the fun.
We always have fun when we're together.
3 times the laughs.
Hi, aren't we with it?
And 3 times the friends.
Isn't this exciting?
You are driving me crazy!
Watch Three's Company now on Pluto TV.
Tomorrow, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Now to high interest, it's a look at what's making headlines around the world. Scott Bessent has been confirmed as the next U.S. Treasury Secretary. He won confirmation in a Senate vote that went 68 to 29 in his favor, including support from 15 Democrats. The former hedge fund manager's policy objectives include 3% GDP growth, and reports indicate that he wants to start universal tariffs on U.S. imports at 2.5%. Now, an internal memo to staff, HSBC says it will wind down some of its investment banking operations in Europe and the Americas. Instead, HSBC will focus more on Asia and the Middle East. It's part of the CEO's ongoing restructuring of the lender. An HSBC spokesperson did confirm the contents of the memo. And billionaire investor Ray Dalio says today's AI frenzy looks a lot like the dot-com surge of the new millennium. The founder of Bridgewater Associates telling the Financial Times pricing has gotten to levels which are high at the same time as there's an interest rate risk, and that combination could prick the bubble. The Nasdaq 100 doubled in 1999 before falling 80% in 2002. The same index has again doubled since the start of 2023. All right, let's get you a check on the pre-market AI trade right now. NVIDIA recouping some of its losses after shedding $500 billion in value yesterday. DeepSeek's release of its AI model has forced a re-evaluation, I should say, of the economics of building AI, with some arguing that the focus should shift from spending heavily to developing more efficient techniques. Bloomberg Intelligence senior analyst Mandeep Singh is here. Mandeep, clearly DeepSeek is causing a rethink here, but is it still too early to determine winners from losers? When we saw Meta, for instance, rise and Apple rise yesterday, is that people determining winners versus losers versus just, trying to find some shelter from the immediate fallout?
Yeah, I think the theme of generative AI and building large language models is still intact. I mean, you will still see a lot of money flow into it. But the question remains, where are the scaling laws going to hold? And will the focus shift towards algorithms now, given what DeepSeek has shown is really you can use algorithms to build a more efficient model when it comes to utilizing your hardware? I mean, for the last 6 months, it was about just how big of a cluster can you build? Will the next version of the model have more parameters? And just scaling it through hardware. Now that brute force approach will probably go away. It's more about, can you come up with a better algorithm to use the tokens in a way where the query is more efficient, the pricing per token is more efficient, and just utilize your hardware more efficiently. So I still think everyone wants to deploy generative AI. This has just shifted the focus away from the chip makers and the scaling of data centers to more applications and really making it cheap for those guys to deploy generative AI at scale.
Well, I love that you call it, this brute force approach, because up until Friday, it felt like it was just a contest of how much money could these big tech giants spend and devote in terms of their CapEx. But talk to us about what this means going forward, not just necessarily DeepSeek's AI model, but what it represents in terms of how some of these companies, how the OpenAIs of the world are going to approach how they build out their models.
I mean, I expect OpenAI will open source at least some of their models. Just looking at how successful DeepSeek is in terms of, getting all the attention and the fact that their training run costed $6 million. I mean, it's in OpenAI's interest that the world uses their model. How do you really spread your ecosystem and really make sure that everyone is using their model? You make it open source. That's what Meta Llama did. I mean, obviously, they were not at parity with OpenAI and Anthropic Claude models for a while. But what DeepSeek is saying is you can be innovative with your architecture and, come up with better pricing. And that way you can open source your model and find other ways to monetize it. But clearly, that LLM layer will get commoditized slowly. slowly. That's the message here, given what we are seeing with DeepSeek.
So Katie mentioned the big CapEx that's being devoted to building out AI. $65 billion for Meta this year, about $80 billion from Microsoft this year. Are those still the right numbers to be looking at? I mean, are they going to start updating that or tweaking that, or at least even talking about tweaking those numbers given what we've seen with DeepSeek?
So what I want to know is how much do they want to spend on training versus inferencing? Because right now, everyone thought the next training run for GPT-5 is going to cost $1 billion. For Meta Llama, it's going to cost close to $1 billion. This is just training the LLM. Inferencing is where you deploy it in applications, and that's where everyone wanted the latest NVIDIA GPUs because you want to train your LLM with the latest chips. Now suddenly the focus has shifted to inferencing because you can do a lot more with your existing chip infrastructure. So the numbers for this year still look good. My question is more around 2026 and 2027, given AI will really scale. I mean, we know this will get deployed across applications, but do these companies need to really invest in the cutting-edge GPUs and really buy the scale that they were allocating right now? Probably not, and I think that's what we'll find out with the earnings season when these companies report their results.
Just to finish on the competitive landscape, I thought it was interesting to see Sam Altman, of course, of OpenAI tweet yesterday, quote, "We will obviously deliver much better models, and also it's legit invigorating to have a new competitor." Those are his words, not mine. I just thought, I mean, what else could he say at that point? But we heard from Donald Trump yesterday, too, saying that this should be a wake-up call for U.S. firms. Do you think that it is, or do you think that some of this management is trying to talk down maybe some of the impact here?
I mean, everyone has acknowledged this, and I go back to, the Project Stargate announcement, $100 billion with outside investments from Masa and, SoftBank. A lot of it was going towards training the next version of the LLMs. Now they have to decide, do they spend so much money upfront, or they invest more in, test time compute and inferencing, because that's what I think DeepSeek has shown. Companies can do more with inferencing than they need to do in pre-training, and I think that debate to me is crucial in terms of how the CapEx gets allocated going forward.
Well, I'm sure you can't wait for some of those earnings calls to start to roll in. Pretty exciting stuff. Mandeep Singh of Bloomberg Intelligence, just a masterclass this week. And coming up, Nassim Taleb tells us that the NVIDIA rout is only the beginning. More on his remarks later this hour. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Whether you're looking to start the year in a new Subaru or Subaru Certified Pre-Owned, Brad Anderson's Prestige Subaru has the Subaru for you for only $299 a month. $299 a month, all backed with lifetime oil changes.
It's a Subi thing.
Delicious multi-meal cereal checks every box. Big bag, big value. Big flavor. Big smiles. They savor, you save.
Wednesdays at Outback, they're for steak and beer. It's Walkabout Wednesday. Get a boldly seasoned and seared sirloin or chicken on the barbie, fries and a draft beer or Coca-Cola, starting at just $13.99. Hurry in. Wednesdays are for Outback Steakhouse.
Lucy! L-U-C-Y. She don't need no alibi.
It's Lucy.
Yeah, it's Lucy. Yeah. L-U-C-Y. She don't need no alibi.
It's Lucy.
It's Lucy. Yeah.
Fall in love with America's funniest redhead all over again.
It's Lucy. It's Lucy.
Only on Pluto TV's I Love Lucy channel.
Thank you very much.
Return to the age of colossal beasts and watch the prehistoric world come roaring back to life.
biggest, baddest of all the T-Rexes that ever was.
It is truly enormous.
Uncover your favorite documentaries on Dinos 24/7, streaming now.
All right, welcome back to Open Interest. A quick check on where we stand. Of course, minutes away from the opening bell. You can see, again, that lift in markets. It's tepid, but it's there. The S&P 500, the NASDAQ 100 higher by about 0.2%. It certainly helps that NVIDIA is currently more than 3% higher in the pre-market. The Russell 2000 trying to decide what to do on your small cap index, currently unchanged. But again, trading hasn't even started. And with less than 4 minutes until the opening bell, stick with us. We'll discuss the market moves with Ben Laidler. That conversation coming up next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Ghostly whispers, supernatural encounters, and unsettling disturbances will take you on a chilling journey.
Sounds like something just took a step over here.
Join this team of experts as they investigate paranormal activity.
Someone was killing people.
Are you prepared to discover what lurks in the shadows?
Whoa, whoa.
Did you hear that?
Someone was watching me.
Oh, no way! Watch the Ghost Hunters channel on Pluto TV.
We've got really great news.
Y'all gonna trip out when y'all hear this.
The sitcoms you love are always streaming on Pluto TV's Black Classics channel.
Perfect.
With back-to-back episodes of Sister Sister.
That's us. Isn't this wonderful?
And Moesha.
You were supposed to wear your suit. Look like a gangster Urkel.
Weekdays starting at 10:30 a.m. Eastern on the Black Classics channel.
Now that's a good schedule.
On Pluto TV.
Watch Love and Hip Hop for free on Pluto TV.
You might like me move.
I'm going to do whatever I got to do.
Is this exciting for me?
You need to check your
Look at you loving me, I see it.
Taking over the world, baby. Let's go.
I love that.
I ain't got 100 million. I can't chill yet.
Well, I'm definitely in love, but if they don't get their together, I'm done.
Watch Love and Hip Hop for free on Pluto TV. Stream now, pay never.
If you want real people and real drama, you did not tell the truth. Watch Nosy. Stream full episodes of the Steve Wilkos Show. Get off my stage! Or check out classic episodes of Jerry Springer and much more.
And you're mad at me now.
What are you waiting for? Available now on Pluto TV. Stream now, pay never.
What do you know about the Lioness program? You want to see it through?
All right, we are moments away from the start of trading on this Tuesday. Welcome back to Open Interest. I'm Katie Greifeld, and of course, we're looking at a much different picture in the immediate pre-market than we were 24 hours ago at this time, when that DeepSeek news really sent shockwaves through the entire tech, AI, and chipmaker complex. You can see green on the screen behind me right now. Investors choosing to buy the dip yesterday in a big way. You can see that in the ETF flows really across the board. Now the question becomes, of course, do you fade make this bid, or do you keep hoping that momentum will return to this market? A lot of big questions facing investors right now as we head into earnings and we head into the Fed tomorrow, of course. Maybe a little bit of a forgotten catalyst given all the drama that we've seen this week already. But about 22 seconds into the trading session, you can see that the bells are ringing down at the NASDAQ, down at the New York Stock Exchange. Plenty of enthusiasm there, and a little bit of enthusiasm as it comes to the first 32 seconds of the trading day. The S&P 500 higher by about 0.2%. Big tech trying to lead the way here, currently up about 0.3% on the NASDAQ 100, but wavering around. A lot of that is thanks to NVIDIA. I will get to that in a second, but pour one out for the small caps here, trying their darndest to get in on the action as well. They were the relative outperformer yesterday, but it was just an absolute bath across the board. But for at least for the Russell 2000, at least for right now, higher by about 0.2%. Let's take a look under the hood here and take a look at the chip makers, because NVIDIA, Micron, and Broadcom all rebounding right now after a brutal session yesterday. Traders really focusing in on big tech earnings now, and any news we might get about AI spending strategies when Tesla, Meta, and Microsoft all report tomorrow. Scarlett, it's going to be a fun one.
It's going to be a fun one indeed. All right, let's talk about some non-tech names. General Motors giving a better profit forecast than many on Wall Street had expected, but the outlook does not account for potential tariffs on goods made in Canada and Mexico. The car maker does say it is preparing for any tariff surprises. And JetBlue reporting a smaller than expected loss for last quarter. The stock currently down 17% in early trade, but its forward guidance disappointed. JetBlue anticipates operating fewer flights in the first 3 months of the year as that turnaround effort continues. But the main story, of course, today is the volatility we're seeing in the tech sector, at least at the start of the week. Bloomberg Technology co-host Caroline Hyde is here now to discuss. And Caroline, it was all about seeking shelter, seeking some kind of safe haven from the DeepSeek news yesterday. And I guess investors kind of found it in Meta as well as Apple. What is the safe haven here within tech? Certainly away from chip makers, isn't it?
It feels as though software suddenly becomes the beneficiary of AI getting cheaper and cheaper, and the hardware infrastructure is a key question. Look, I'm surprised at how little NVIDIA is rallying right now, with clawing back about $68 billion in market capitalization when it lost more than $600 billion in market cap yesterday. So clearly people are still sensitive to the idea that DeepSeek is managing to, with lower grade chips, yes, still NVIDIA chips, but not the H100s that we also used to here in the United States, managing to create deeply effective, efficient, powerful models are one. In fact, DeepSeek's just dropped an image generator as well, so the narrative just continues here. And I think though Meta was a key outperformer, not only because I think this is going to help in terms of their advertising models, generative AI gets cheaper, they can do more with less, but also they've led the way when it comes to open source model creation as well. So that also steals a march for them a little bit in terms of the narrative.
I agree with you on NVIDIA. I mean, we spoke to CJ Muse over at Cantor Fitzgerald yesterday, who is in NVIDIA bull, to be fair, but his point was basically that this is all good news for NVIDIA because AGI is closer. It's not further, but in any case, of course, we're sitting at the precipice of really the heart of earnings season. We have a ton coming up in the next couple days, including Apple on Thursday. What do you think that people really will be listening for on the earnings calls? It feels like it's all we're talking about.
CapEx, CapEx, CapEx. How much are you spending? And I don't think you're going to hear them backing away. Microsoft has said they're committing $80 billion in terms of data center spend. Now, you're going to hear a lot about Jevons paradox suddenly, this idea that more efficient you get about coal and basically the fact that we got more trains, more efficiency, but you still needed more coal. The more efficient AI becomes, the more data centers you're still ultimately going to need. This was also what we heard from ultimately a spokesperson coming from NVIDIA. They were saying, look, this is good for us because it's not all about training your models that, yes, clearly R1 was very cheap at doing. It's about inference here. It's about using the models. We just saw yesterday, perhaps there was a crackdown in terms of some sort of malicious attack on DeepSeek and why you couldn't sign up to it. But maybe it's also they didn't have enough cloud provision, and then also to get the answers to your questions, you need a lot of data centers and compute. So this is still the argument coming from Jensen and the likes from NVIDIA, and indeed you'll hear it from Microsoft. The cheaper it gets, the more efficient it gets, the more you and I use it, the more we're going to need compute.
It's just more good news as far as Jensen Huang is concerned. Is he on the calendar, to do anything, speak at any conference anytime soon? Because I know his earnings doesn't come till much later in the cycle, but whatever he says right now is going to be top of mind and steal the focus from everyone else.
February 26th, we've got to wait for their numbers. And that's always the way, and that's why this week we start to try and read the tea leaves. What is Satya going to be saying? And of course, Amy Hood, the CFO, going to be saying about their spend on data centers, on GPUs. What is Amazon going to be saying? What is Microsoft, as I just mentioned, going to be saying? What's Meta going to be saying? And their commitment to $65 billion? And how much of that spend is about GPUs coming from NVIDIA? I think we managed to draw out that if they remain committed to CapEx, so too NVIDIA continues to win in the short term. This is a longer term train that we're going to have to be navigating.
All right, Caroline, great to see you, of course. Caroline Hyde, she is the co-anchor of Bloomberg Technology. That's at 11 a.m. Eastern. It's a must-watch show in any case, but especially this week, given all of the drama that we're seeing in the tech sector. Let's take a quick beat on Starbucks here. Starbucks reporting after the bell today, but we have some news out from CEO Brian Niccol working to reinvigorate sales at the company and replacing two top executives. The president of North America and the chief supply and customer solutions officer are leaving Starbucks. This is according to a statement today. And again, we're looking ahead to earnings after the bell. And Starbucks, of course, has been a very tough story.
It's been a tough story. It's in turnaround mode. And Brian Niccol is starting with the little things, right? Making sure that customers who are in store get a ceramic mug as opposed to a disposable cup, trying to make sure that the store personnel greet customers when they come in, ask them if everything's okay. There's a lot of Q&A and surveys with customers. So he's getting the small stuff right, making sure that Starbucks remains a hospitable place for customers before moving to tackle some of the big strategy issues. Investors are giving him quite a bit of space to do all that, but at some point they're going to want to see results.
That's true. I mean, a lot of hopes and dreams pinned on Niccol given the job that he did at Chipotle, but we'll see how long that patience lasts. But let's broaden out now and welcome in Ben Liedler. He is Bradesco Securities Head of Equity Strategy. And I won't ask you about your Starbucks order, but I am interested about what happened yesterday and what your read of was when you think about DeepSeek, their cheaper AI model, and all of the question marks that are around these big CapEx plans from a lot of the U.S. tech giants. Did anything fundamental change for you yesterday?
Well, the market certainly gave itself a collective heart attack. It's not every day you see 30 large caps down 10% or more. But your point, I think this tells us more about crowding and more about the high valuations in some bits of the US than it really does, about the fundamentals. I mean, this has been a sort of one-way freight train for a couple of years now. It's sucked in an awful lot of capital. It's taken valuations to quite high levels. I don't have a problem with them, but they are objectively high. And I think we had a little bit of a reality check yesterday that, maybe tech disruption is not a one-way street. But I don't think the fundamentals have maybe decisively changed for big tech.
Yeah, it's a great point. Maybe the fundamentals didn't change, but certainly the valuations under a microscope right now. And with valuations, it always feels like they don't matter until they do. And yesterday, they certainly mattered. Do you think that they will continue to matter in this market? Is there more pain, more indigestion to come?
Listen, I think big tech is fine, but I think the real opportunity is everywhere else. And our narrative has really been this bull market broadening out. It's been a bit of a one-legged stool so far. It's all been about the Magnificent Seven and the broader tech sector. I thought it was very interesting yesterday that value, you mentioned small cap, rest of the world, they really picked up the baton. I think that's extraordinarily healthy. I think a little bit of interest, a little bit of money will go a very, very long way in some of these other assets. They've got very small and very cheap, but I do think they are the sort of canary in the coal mine for a healthy broadening of this bull market.
Yeah, people talk about that a lot, this broadening out, and finally perhaps we're seeing it with some distress coming to tech first. I look at the VIX, currently below 18 after surpassing 22 yesterday. Still, at yesterday's close, it was the high since the December 18th Fed decision that sparked that big sell-off. Feels like volatility is the new normal now. Is the volatility a good thing for a stock picker?
I think so, and 20 is basically your long-term average. So it's taken us a few years to get here, but this is what we were used to living with until the last few years. And I think the combination of the fact that big tech may not be a one-way train anymore, the new administration, the potential threat of tariffs, which we may get as soon as Monday. We have a Fed meeting. I can go on and on and on. And there's plenty of reasons, I think, for this new normal, which I think is absolutely right, of stock market volatility.
All right, speaking of the Fed, Jay Powell, will be taking the lectern tomorrow at 2:30 p.m. We know his comments last time around did spark a decline in asset prices. What will you be listening for when it comes to anything he betrays on inflation? Because obviously he's hamstrung by the fact that there's not a whole lot of policy to respond to so far, right? There's a lot of general vague threats about tariffs, but no details to really work your way into models.
I think he's going to try and take a punt. The latest inflation number has been, reasonably, benign. There's obviously a lot of macro uncertainty, ahead of us. I think he'll try and give a sort of open-ended statement. But I think, the market's already moved quite aggressively, I think, to pricing, basically no more cuts or maybe one more cut. But I think the risks are elsewhere. It's this one-legged stool of big tech. It's potential tariffs coming on the rest of the world. It's that policy mix. I think for once, and touch wood, I think the Fed will take a back seat here.
Well, Ben, that's where I wanted to go. Basically, what are the catalysts of this market? Touch wood, like you said, the Fed seems to have taken a back seat. But, I mean, if we start to really reassess that rate cut picture, I mean, could that overwhelm what we're talking about when it comes to politics, when it comes to earnings season as well?
I think ultimately this comes back to earnings. With what we know now, we're on track for the best earnings season in the US in a couple of years. Earnings are accelerating, earnings are broadening out, margins are remaining, extraordinarily resilient. I think that is the focus. It's going to take quite a lot of other stuff, I think, to really push that off track.
All right, Ben Laidler, thank you so much for joining us. Ben Laidler with Bradesco, giving us an outlook into what we can anticipate, earnings driving everything. Coming up, speaking of earnings, GM tops profit estimates, but the stock slumping more than 8.5%. We take a look under the hood next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Whether you're looking to start the year in a new Subaru or Subaru certified pre-owned, Fred Anderson's Prestige Subaru has the Subaru for you. Drive today with 0 APR for 72 months, all backed with lifetime oil changes.
It's a Subi thing.
Welcome to a brand new season.
So this is a de facto playoff game for them.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle. Dive back into the glamour, the gossip, and the scandal.
It's outrageous. I'm gonna get even. Oh my God. Brenda, how could you? I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV.
This could get crazy.
All reality, WeTV.
My family has drama too.
It's real voices.
Never know what's going to happen once you get us all together.
There is a skinnier person inside of me.
It's real emotions.
I do.
Robbing a bank is kind of a turn on.
Unbelievable.
And it's all in one place.
I had 72 hours before
with marshals come after me.
What?
I'm here for it, honey. All of it.
All reality WeTV. Those affected by the Los Angeles wildfires urgently need support. Help the American Red Cross provide meals and shelter. Donate today by going to redcross.org or call 1-800-RED-CROSS.
A mother goes missing, but how do you prove it's murder without a body?
You don't get away with murder because you're good at disposing of bodies.
48 Hours is all new. CBS Saturday.
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, Roper Technologies upgraded to buy from hold over at TD Cowen. The analyst says that the software firm's U.S.-centric portfolio could be attractive to investors. Next up, we have Barclays upgrading Victoria's Secret to overweight, saying they have confidence that the new CEO is the right choice to lead the lingerie company's brand revival. Shares up almost 4%. And finally, let's end with Ciena, raised to overweight over at JP Morgan. The analyst is saying that yesterday's sell-off of the communications tech company offers an entry point into better near to medium-term momentum. And another stock we're keeping a close eye on this morning is, of course, General Motors. The stock falling sharply after this morning's earnings report, even though the automaker announced better than expected profits in the futures, but it did not take potential tariffs into account. Here with more, I'm pleased to say we have Bloomberg's Detroit bureau chief, David Welch. So tariffs feels like a pretty big thing to leave out, David. Did we hear anything more in terms of detail on the earnings call?
What they said is they have contingency plans, they have things that they can do. They didn't give a lot of detail on that, and I think that's what investors are reacting to. General Motors gets about 22% of its U.S. sales from vehicles built in Mexico, and they've got pickup truck plants. It's its most profitable vehicle line. They've got them in the U.S., of course, but they have a plant in Mexico, another one in Canada. So you're talking about volume on their most profitable, highest volume vehicles potentially being subject to tariffs, and all of that kind of gives a potentially, cloudy future here for earnings for the next few quarters until this whole tariff situation between the Trump administration and the other USMCA countries gets ironed out. So you have that really hanging over the stock. And the other thing is, the upgrade on the high end was an addition of about $700 million in operating profit this year. That's very good, but most of that, $500 million of it, came from the elimination of Cruise. That tells you that the rest of the business is solid. You're seeing improvement in China, you're seeing strong pricing and good sales in the U.S., but it's not enough to overcome these other potential headwinds here, and it just shows that their core business is stable, growing a bit. Pretty good, pretty solid, but who knows what's going to happen with tariffs, and that's got everybody on edge right now.
Yeah, it leaves GM in an unenviable position, which is the things that it can control, it's doing, it's executing on, but there's too much that's really left to Washington and what may come, and it really has no ability to manage any of that. Having said that, what does the business look like on the whole in the United States, which is, of course, now that it is improving in China and recovering a bit there, the U.S. remains its biggest market.
It is, and in the U.S., GM has kept up pricing in the fourth quarter. Sales were up 21%. Those are all good things. Some of their competitors are discounting in the U.S., adding rebates. They've been able to avoid that so far, and they think they can for a while, although they're acknowledging that they could see some price pressure this year. The other good news for them is they're starting to mitigate losses, and in fact, getting to variable profitability on their electric vehicle program. But there, too, they say that the biggest drivers of reducing losses and getting to a operating profit on the electric vehicles is scale. That means more sales. And if the Trump administration gets rid of or at least greatly reduces the tax incentives, that again, that's another issue that could be a headwind for GM this year. They'll probably still grow sales in their EVs. They'll continue to get scale, but it could slow down their march toward making that a totally profitable program.
All right, David, appreciate your reporting. Of course, that is Bloomberg's David Welch on a terrible day day for General Motors, currently down about 8.5%. It was one of the automaker's standouts last year, but can't say the same today. Let's check in on Boeing quickly, though. Of course, they reported earnings this morning. You can see shares flying on a relative basis relative to Boeing's recent history, up about 4% right now, actually foregoing setting financial targets for 2025. But we did hear from new CEO Kelly Ortberg saying that he's optimistic about returning to a production rate of 38 737 aircraft per month this year. Scarlett, talk about a turnaround story. This is one that investors have been watching super closely.
Yeah, 6 years of losses over at Boeing. This is clearly a long-term turnaround story. Nothing's going to happen right away. And even to that end, with Kelly Ortberg addressing these needs to invest in core businesses, perhaps, paring down the unprofitable businesses. He's not saying a whole lot of detail on that. It's still a work in progress here. And the big question is what happens with demand for the jets? And that is a good news story because there's not enough supply of these jets.
No, not at all. So we'll continue to follow that one. Just one of the many things that we're keeping an eye on.
All right, coming up, we've got Nassim Taleb saying NVIDIA could see further losses 2 or 3 times what we saw yesterday. That was a 17% plunge. We've got more in our Wall Street Beat. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
With Miller Mock College's online programs, you can learn here, or even here. Their flexibility gives you access to quality education no matter where here is for you. Our experienced instructors provide training for careers in business and healthcare. You can even earn your bachelor's degree in 33 months. Reach your goals your way. Miller Mock College, where passion becomes skill.
Over 500,000 people with AFib have left blood thinners behind. With Watchman, a safe one-time implant that reduces stroke risk and bleeding worry. For life. Watchman, it's one time for a lifetime.
Unexplained Zone, where truth seekers find answers.
What was it?
It's rotated. Join the masters to follow the evidence.
That's proof positive.
Uncover the cover-ups.
The U.S. government know much more than they let us believe.
And never stop searching for the truth.
We are on full UFO hunter alert here.
Somebody died in this room.
Something to ponder. Unexplained Zone.
Time now for the Wall Street Beat. Black Swan author Nassim Taleb says the steep sell-off in NVIDIA shares yesterday exposes the market's reliance on a few names, and he warned of more losses ahead. Look at NVIDIA right now, Katie. Unchanged. It had opened and gained as much as 3.2%, but it's now teetering around, so this recovery that we're anticipating may not come to fruition.
Yeah, it's pretty nerve-wracking here, and I don't know, maybe it adds some weight to what Nassim Taleb is saying here in terms of more losses ahead. He, of course, spoke with Sonali Basak on the sidelines of Miami Hedge Fund Week.
NVIDIA went up from something like 12, 13, 14, 18, all right? Went up an order of magnitude. So giving back 17% is not large. It's just a small setback.
Why do you think it was such a sharp sell-off? Was it market structure and too overcrowded one name? Or was it the
everybody focuses on the same story, and people notice the falls more than the rises, okay? They found it natural that the story would work, that NVIDIA would keep rising. And unnatural when it pulls back a little bit. It pulled back, very little considering the risks involved in such an industry. You're building everything on the hope that people will use your chip, will use chips, rely on chips, and that the investment will not come from software or someone figuring out a better idea or some other method, and which is what happened. It's a hint of what is to come.
Well, are you saying that there could be a lot more in terms of a drawdown?
I think that the over-reliance on that story of, number one, you're going to be the one making money from AI, NVIDIA, not others. This over-reliance is completely at odds with our knowledge of history, all right? The one who came up with the first laptop computer, Sir Clive Osborne, went bankrupt. Okay, the one who, I mean, look at history. Those who come up with a new technology, they think, hey, you know what? We figured out this is going to be the future. We own the future, and sure enough, okay, someone else will make the money.
All right, that was Nassim Taleb speaking with Sonali Basak in a very Miami setting. Of course, the music and the setting didn't quite match up with what he was saying because it was pretty doom and gloom when it comes to what we could see in terms of more pain on this NVIDIA story.
Yeah, he felt very comfortable sitting there, you know, in the Miami heat with the jolly music talking about what he expects. He calls tech firms gray swans because investors underestimate the possibility of one-day deviations in their prices of the likes that we saw yesterday in NVIDIA. $589 billion in market cap lost just in one day.
And gray swan seems generous from him because a lot of people were saying that yesterday was the black swan moment for AI. It wasn't even something that a lot of people had on their dance card. We heard from Ruth Porat over at Davos last week saying that China was maybe a year off from American AI models or something to that effect. And maybe even that timeline is is being questioned right now. We'll continue to follow, of course, what's going on in the market, what's going on with NVIDIA, trying to decide whether it wants to go higher or lower right now. You can see the S&P 500 taking a leg lower, down about 0.1%. The NASDAQ 100 trying to hold on to gains. Stick with us. Coming up in our next hour, we'll speak with Grace Peters. She is JP Morgan Private Bank Global Head of Investment Strategy. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
Every business is on its own path to AI. And Dell AI Factory with NVIDIA can provide you with the broadest portfolio, allowing you to quickly implement the AI you need, help keep your data secure, and get the flexibility to scale as you grow. So no matter what business you're in, you can keep moving forward.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
You dream of a new career, but fitting school into your already busy schedule can be a challenge. At Miller Mott College in Chattanooga, we've designed online training for people like you, working parents, people with big dreams, the ones who never give up. With our online programs, you can receive training for professions in healthcare, business, cybersecurity, and more. Programs can be completed on your schedule. Dreaming of a new career? Get in touch. It takes just a few minutes to find an online program that could change your life. Get started today.
Nissan Rogue has been named a Consumer Guide Best Buy for 11 years in a row. Drive the award-winning Nissan Rogue today.
Have you ever wanted to whistle to the Andy Griffith Show? Now here's your chance. Don't miss a beat and watch the Andy Griffith Show on Pluto TV.
Those affected by the Los Angeles wildfires urgently need support. Help the American Red Cross provide meals and shelter. Donate today by going to redcross.org or call 1-800-RED-CROSS.
Hollywood Squares.
That was exciting.
The Price is Right at night. Are you ready? And Raid the Cage.
You are more stunning than the taser they used on me when I got too close to you.
CBS Wednesday is Game Night, starting at 8, 7 Central on CBS.
All right, we are 30 minutes into the Tuesday trading day. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Scarlett Fu. Matt Miller and Shonali off for the day today. Shonali Bassick, sorry.
Yeah, that's her name. Let's take a look at markets right now. Of course, we are waiting for some economic data, which will be a nice something different, given that we've all been so focused on AI. Taking a look at the Conference Board consumer confidence figures for January coming in at 104.1. That is actually lower than the survey and lower than the prior reading. The survey was looking for 105.7. The prior reading was 104.7. So disappointing a little bit relative to recent history. Again, the Consumer Conference Board, the Conference Board consumer confidence reading for January coming in at 104.1. Let's break it all down now with Mike McKee. He knows all these words very well. Mike McKee, you take a look at these figures. So you think about the Federal Reserve meetings that's kicking off today in Washington. How does this fit into the broader picture that the Fed is assessing right now?
Well, confidence is really misleading in the sense that it doesn't really tell us what consumers are going to do. It tells us how they are feeling. One of the interesting questions is going to be about buying plans, and the Conference Board report doesn't come out immediately with the breakdown as it used to, but basically purchasing plans, it says for homes and cars were flat in January and flat for most appliances. Now, some of the other indicators have suggested maybe people wanted to start buying ahead of tariffs, ahead of prices going up. So that doesn't quite validate that theory. But inflation expectations do matter to the Fed in these numbers. It's not the same as the University of Michigan that gets all the publicity, but their average 12-month inflation expectations increased from 5.1 to 5.3%. Pay no attention to the number itself, because Americans aren't very good at guessing what inflation is, but the fact that it is going up matches what we have seen in other surveys. So that might be something that concerns the Fed.
You know, speaking of prices going up, we had the S&P CoreLogic housing price index come out, and that indicated prices are moving up for housing, as at the same time that mortgage rates are climbing as well.
Yeah, we had seen a decline in the rate of increase in home prices, but that has apparently stalled, or at least did in November. Remember, these are 2 months delayed. So we'll have to see if those come down in the future. The rent numbers have been coming down that suggest that housing overall in the CPI will come down, because that's what they use rather than home price numbers. Might mention also the Conference Board present situation number, 134.3, way down from 140.2, and expectations do rise, 83.9 from 81.1. So people don't like where we are right now, with inflation coming down, unemployment low, and growth strong. But they think things are going to get better.
Yeah, it's always something, isn't it? Mike McKee, great to see you before you're heading to D.C. for the Fed meeting.
Yes, we will be there tomorrow.
We will see you. Have your question ready on inflation?
Everybody wants to know, how do you pose a question to Jay Powell about Donald Trump when you know he's not going to answer?
Yeah, that's the art of journalism, isn't it? Mike McKee, great to see you. We'll be speaking with you tomorrow, of course. Let's broaden out this conversation now, though, with Grace Peters. She is J.P. Morgan Private Bank Global Head of Investment Strategy. Grace, great to have you on set with us.
Lovely to be here.
So, you know, coming into this week, I might have asked you about earnings, I might have asked you about the Fed, but I'm going to ask you about AI and what we saw yesterday, that broad-based sell-off. Were you just fielding phone calls from nervous clients? How did it actually feel from where you were sitting?
AI has been a huge theme of ours, and it continues to be. So our conviction has not changed because of some volatility in markets. Indeed, one of the key themes that we've been talking with clients through the course of this year is that they should expect more volatility, particularly equity market volatility. We've seen a fair amount of rate volatility over the last 12 months, but equity volatility has been extremely benign, and we should expect more more. As it pertains to AI, as I say, it's still a key theme for us. We are employing AI in our business. We can see transformative impacts, and we do believe this is going to be a really positive thing for the economy. But there's a whole AI value chain, and I think, Scarlett, to the point you made earlier, investors are just too concentrated in one part of that, whether it be the hyperscalers or AI infrastructure. I do think there's also a positive story that could emerge about AI adoption here. That means when we think about that value chain, you want to focus more on the applications, on the revenue beneficiaries, because ultimately, if this technology is embraced with a faster J-curve, that is going to be positive for the economy, for the US economy, perhaps for the developed world and economy at large, which I think is positive for equity markets. So yes, fielding lots of calls, but I think not panicked, but in the context of building portfolio resilience.
Yeah, and to that point, a lot of people are saying names like Salesforce.com and ServiceNow are beneficiaries here of the cheaper AI models. The thing with looking at big tech names, and NVIDIA in particular, which is now up by about 1.5% at the moment, is that so many people use them as a safe haven in their portfolios as well. It wasn't just the growth component, it was also their utilities, their modern day utilities in many ways. Do we need to rethink that given the expectation for greater volatility in these names?
So I think, why would they use it as a utility? It's because of the cash flow generation. If we think about even, without even focusing on one name, the largest 10 stocks in the S&P, they are spending around 41% of total S&P R&D expense. So we know that they're investing for the future, but they're also generating over 25% of cash flow. Despite that investment, they can afford to pay dividends and they can afford to do share buybacks. Indeed, of the S&P's overall 1.2 trillion, over 30% of share buybacks will come from these 10 large companies. So that's what makes them, actually a quality defensive ballast in the portfolio, as well as obviously growth stocks. And that would be one of the reasons that I'd say we don't need to panic here. Sure, the focus of the market through that AI value chain may shift, as discussed, but I think the cash flow generation and the reason why we want to invest actually in listed companies, quality listed companies with the balance sheet, is one of those reasons why I think that, no panic, and actually some of those stocks will prove to be a good entry point.
I'd love to bring this conversation to the bond market, because honestly, the most interesting thing I saw yesterday was this reaction, this bid that we saw across the Treasury curve in reaction to what we were seeing in the equity market. And I saw some explanations for why BMO was talking about the potential wealth effect, maybe taking some pressure off the inflationary landscape. I ran into Tom Keene this morning. He was talking about GDP ramifications. What do you make of what we saw in the bond market yesterday?
I think it's risk off. I think it's, investors saying, right, I'm pretty concentrated in equities, I'm concentrated in US equities, and I'm concentrated in tech. Where am I going to go? Where can I go for that more secure return? And I think that is one of the factors, the risk-off factors driving the bond market.
As easy as that, just that haven bid.
It's never that easy. There are other factors below the surface, but I do think that risk-off mood, that knee-jerk reaction, because the price action yesterday felt, let's do something rather than think about it. And a lot of that is also maybe baskets, people trading AI baskets that don't differentiate from a bottoms-up basis. And so I think when you're making those quick decisions, as I say, we weren't encouraging our clients to do that, but I think that is one of the drivers into the move in the Treasury market.
To Katie's point, I think about the 10-year and how the yield has climbed from 3.6% in September to as high as 4.8%. Yesterday, it dipped below 4.5%. Right now at about 4.55%. With these big swings in Treasury yields, how do you price equities? I know that tech being its own story, its own secular story is one thing, but how do you price other parts of the market that are interest rate dependent?
I still think it comes back to the earnings story. So if we think about technology shares have obviously driven outsized earnings and cash flow and share buybacks, all of which is positive for the broad S&P. But obviously, we know large parts of that haven't participated over the last 12 months. So how am I going to price equities going forwards? I think we're looking to those other parts of the market, such as financials, still parts of the industrials market, that I think can drive the earnings growth. This is just a US equity story. We are firm believers in US exceptionalism in the economy. Only equity portfolio, because a lot of that good news is, and when you look at some of the nascent data coming out of Europe, the PMI is slightly better. I think the EC in Q1. Some of that will support, European equities as well.
That's really interesting. Just two quick notes there on financials. Actually, the financial sector hit an all-time high yesterday, Scarlett. All the mayhem of yesterday's market.
Good point.
I want to continue.
I don't really want to take bets on these economies from a top-down basis. We know there are structural issues in both of those regions that I mentioned, but I think the themes are global. You know, whether we think about AI as a key theme, security, cybersecurity, supply chain security, these are global themes, you know, I would approach it more in a thematic way rather than just a top-down taking a bet on the economy. And some of those themes can also be accessed in private markets, so infrastructure, which again can be US and actually European in that regard. Very interesting.
So that makes a lot of sense, but anytime you invest outside the U.S., you need to think about the currency impact. And we've had a very strong dollar. It's seen staying strong right now, even as there are increased forecasts for it to start faltering maybe in the second half of this year. How are you thinking through that exposure to the strong dollar?
Yeah, I still think the dollar is going to broadly retain its strength. When we think about growth differentials, it favors the dollar. Interest rate differentials favors the dollar. And as I say, in a risk-aware portfolio, I think the dollar is one of the ways people will think still about expressing their overall risk budget. What I would say is another asset that we think still is upside is gold. When we think about, you know, not so much from the equity, hedging the equity perspective, but I think gold in the portfolio is a good complement to
It didn't play much of a role yesterday in the advance.
That's a good point.
You know, it didn't rise as a safe haven.
No, but I think that when we think about deficit concerns and we think about geopolitical concerns, that's where the incremental buyer is coming in and where we think the interest really lies.
Yeah, it'll be interesting to see if gold comes back as a haven asset. Also, it'll be a fun science experiment to see what happens to the dollar if we do get universal tariffs. Grace, got to leave it there for now. Great to see you. That is Grace Peters of JP Morgan Private Bank. Now, coming up, watching shares of Boeing and JetBlue. We're going to dive into their quarterly results next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Return to the age of colossal beasts and watch the prehistoric world come roaring back to life.
We've got the biggest, baddest of all the T-Rexes that ever walked. It is truly enormous.
Uncover your favorite documentaries on Dinos 24/7, streaming now.
From chasing leads to dissecting clues.
There's something I think you ought to see.
For these detectives, the hunt is always on.
Would you mind pointing that gun down?
They'll do whatever it takes to close the case.
I can promise you one thing, the truth.
Has anyone seen anything unusual?
So I've got better things to do with me time, like actually catching criminals.
Catch the best of British crime drama on BritBox Mysteries.
Lucy!
L-U-C-Y. She don't need no alibi.
It's Lucy.
Yeah, it's Lucy. Yeah. L-U-C-Y.
America's Funniest Redhead all over again. Only on Pluto TV's I Love Lucy channel.
Thank you very much.
I'm going to be on television.
Three's Company on Pluto TV has 3 times the fun.
We always have fun when we're together.
3 times the laughs.
Hi, aren't we witty?
And 3 times the friends.
Isn't this exciting?
You are driving me crazy!
Watch Three's Company now on Pluto TV.
Tomorrow, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
All right, it's now to high interest to look at what's making headlines around the world. The U.S. Immigration and Customs Enforcement expanding its raids to New York City. This follows a series of raids in Chicago. The newly appointed Homeland Security Secretary, Kristi Noem, joined an enforcement operation in New York this morning. In a post on X, she wrote that a criminal alien with kidnapping, assault, and burglary charges is now in custody. Denmark's prime minister is trying to drum support from European allies to stand up to President Trump's efforts to acquire Greenland. She met with Germany's Olaf Scholz in Berlin and French President Emmanuel Macron in Paris before meeting with the Secretary General of NATO in Brussels. Those meetings came after a viral photo of the prime minister dining with the leaders of Finland, Sweden, and Norway. And staying in Europe, UK Prime Minister Keir Starmer indicates he wants a better trading relationship with the U.S. He spoke with Bloomberg's Francine Lacqua and discussed his recent phone call with President Trump.
There's a huge amount of trade between our two countries. I think that's to our great advantage. I think that's something that we can build on. And so I was very pleased with the engagement that we've had with President Trump. We'll build on that.
And in the markets, Boeing and JetBlue both out with their latest results this morning. We're looking at shares of JetBlue tumbling after its cost outlook was higher than expected. Meanwhile, you've got Boeing's new CEO, Kelly Ortberg, saying he is realigning the company around key business lines after posting a $4 billion operating loss for last quarter. Joining us now for more is Bloomberg News' Brooke Sutherland. She is our Boston bureau chief, and she is also author of the Industrial Strength newsletter. Brooke, I want to start with JetBlue, given the tumble that it's seeing in shares today. Feels like this is a pretty large reaction. You might even say outsized reaction to the cost forecast, which was higher than anticipated. Put this in context for us, given that a couple of other airlines have reported already.
Sure. I mean, it's really just a continuation of this have and have not story in the U.S. airline landscape, where you see airlines like Delta and United that cater more toward premium flyers and have a larger international business, really sort of standing out from the pack and moving, further up the profitability curve, whereas the more domestically focused, lower cost airlines are really struggling. That's not as, a robust corner of demand for travel right now. And a lot of those airlines ended up expanding in the wake of the pandemic and are now sort of dealing with that as we have sort of a glut of overcapacity on some of these more leisure-oriented routes. And then, as JetBlue talked about today, costs are going up. And when costs are going up and you have too much capacity, that is a dangerous equation. And I think you're just really seeing investors react to the continued travails of that corner of this airline market. And JetBlue in particular is really just struggling to find its footing after its 2 attempts at consolidating with other airlines to really expand its market share failed. That's, of course, the commercial partnership with American Airlines and then its attempted merger with Spirit that was blocked on antitrust grounds.
Yeah, absolutely. And with that in mind, given that we have a new administration in the White House, of course, it seems like investors are really enthusiastic about the prospect of a reinvigorated M&A market. Could we see JetBlue explore that route again, or have they just been burned too many times?
I think it might take a lot for them to jump back into the airplane consolidation game, just given their past experiences. And also, M&A is always tricky, but it's particularly tricky in airlines when you're talking about merging 2 different brands. And that's certainly something that you ideally would like to do from a position of strength. And so, I think JetBlue is probably focused right now on getting its own house in order, getting those costs down, ideally improving pricing and seeing more of, a stabilization in demand.
Well, given that shares have been been so underperforming, and JetBlue isn't exactly in that position of strength. Brooke, could we see them actually be a target here, or am I getting too silly?
I think, the airline industry is highly consolidated, and this enthusiasm about M&A is certainly real and valid. But I think, where you're more likely to see deals is perhaps outside of these already very highly consolidated sectors like airlines. You can look at the past precedent, and the argument that antitrust advocates have made is that more consolidation is not always helpful in terms of consumer choice. And I don't know, that argument is necessarily going to resonate a lot more right now. But there's certainly a lot of opportunity for M&A in some of these other sectors. But some of these highly consolidated industries that have already seen so much M&A, it might be trickier.
Yeah, and one of the reasons that JetBlue had cited for M&A was, of course, it wanted to increase its fleet, and it couldn't do so without a partner. Speaking of which, the company that makes those airplanes is Boeing, and we're looking at Boeing shares climb to a 6-month high this morning. What are we hearing from Kelly Ortberg that has people feeling confident that it can deliver on the planes that are being ordered?
Remember that they pre-announced their numbers last week, which I think was helpful to Boeing to get some of the bad news out of the way. This was not, a particularly strong financial quarter for the company as it dealt with the aftermath of that prolonged labor strike and the continued challenges with ramping up its jet output and getting its factories in better order. But what that enabled Boeing to do is really focus this earnings announcement today on looking forward, on Kelly's vision for remaking the company and really stabilizing it and putting it on a stronger footing. There were a number of charges in the defense side of the business. He says that they're clear-eyed on those challenges. It's worth remembering that we've heard very similar comments from Kelly Ortberg's predecessor, Dave Calhoun, one of the last times that Boeing announced a slew of charges in that defense side of the business, and these charges just keep piling up. We also heard from Lockheed Martin today. They took nearly $2 billion of charges on some of their classified military programs. And so this is going to be a theme that's going to continue to play out for the defense sector as some of these companies grapple with fixed price contracts that were signed really without taking a lot of these inflationary pressures into account.
Well, looking forward to following your reporting on that turnaround. Our thanks, of course, to Bloomberg's Brooke Sutherland in Boston, breaking down a tale of two earnings. You have Boeing shares currently higher by about 6%. JetBlue suffering its worst day ever. Shares down by more than 23%. Now, still ahead, we'll talk about Microsoft joining the lineup of TikTok suitors for its U.S. operations. That, at least, is according to President Donald Trump. More on that next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This could get crazy.
All reality WeTV.
My family has drama too.
It's real voices.
Never know what's going to happen once you get us all together.
There is a skinnier person inside of me.
It's real emotions.
I do.
Robbing the bank is kind of a turn on.
Unbelievable.
And it's all in one place.
I had 72 hours before the marshals come after me.
What?
I'm here for it, honey. All of it.
All reality WeTV.
Welcome to a brand new season.
So this is a de facto playoff game for them.
Watch Love and Hip Hop for free on Pluto TV.
It might lighten the mood.
I'm going to do whatever I got to do.
This is riding for me. You need to check your
Look at you loving me. I see it.
Taking over the world, baby. Let's go.
I love that.
100 million, I can't chill yet.
Well, I'm definitely in love, but if they don't get their together, I'm done.
Watch Love and Hip Hop for free on Pluto TV. Stream now. Pay never.
Those affected by the Los Angeles wildfires urgently need support. Help the American Red Cross provide meals and shelter. Donate today by going to redcross.org or call 1-800-RED-CROSS.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Google says it will take its cues from the U.S. government as if it has to change the name of the Gulf of Mexico and Denali on its maps. The company will only make changes when the government updates its official listings. Remember, last week, Trump ordered that the Gulf of Mexico be renamed to the Gulf of America, and he also ordered that America's highest mountain peak be changed back to Mount McKinley. Next up, President Trump also says that Microsoft is in talks to buy the U.S. arm of TikTok. Microsoft, for its part, declined to comment on any involvement in a possible deal. There's great interest in TikTok right now from many quarters of the tech industry, with other bidders including AI startup Perplexity and also billionaire Frank McCourt. And finally, we have LVMH selling its stake in Stella McCartney back to the brand's founder as the luxury group cleans up its portfolio amid a downturn for high-end goods. McCartney will repurchase the minority stake after a collaboration of more than 5 years. And those are some of your social climbers. Let's get to these markets right now because we have a rally on our hands. Momentum coming back into this market. The S&P 500 at session highs right now, up about 0.5%. You also have the NASDAQ 100. You're beaten down. Big tech stocks now making a run for it. You can see the NASDAQ 100 currently up about 0.9%. NVIDIA had been hovering back and forth. It was up, then it was down. Now it's up again. We'll continue to track the motion of markets here. Also in the bond market as well, with that sell-off developing now. 10-year Treasury yields currently higher by about 3 basis points. Now coming up, the face value movement is in full force across the concert landscape. We'll speak to the CEO of Cash or Trade next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
60% of women experience leaks with bladder protection pads. Try Always Discreet. It has a unique core that converts liquid to gel and bunches 25% less often than Poise. Try Always Discreet. It's designed to protect.
This winter, let Fred Anderson's Prestige Subaru keep your Subaru adventure ready and your furry friends happy. During our winter service event, get a complimentary road-to-roof inspection and save up to $75. Show your pet some love. Take 15% off pet accessories or get $5 off any service when you add their photo to our Pet Wall of Fame. Plus, with Subaru Express service, no appointment necessary. Schedule today at PrestigeSubaru.com.
It's a Subi thing.
Is it possible to be more capable and more practical? Be able to perform here and here, make a statement while barely making a sound, and command the road as well as what lies ahead. How we get there matters. Get exceptional offers at your local Audi dealer.
Over 500,000 people with AFib have left blood thinners behind with Watchman, a safe one-time implant that reduces stroke risk and bleeding worry. For life. Watchman. It's one time for a lifetime.
We've got really great news.
Y'all gonna trip out when y'all hear this.
The sitcoms you love are always streaming on Pluto TV's Black Classics channel.
Perfect.
With back-to-back episodes of Sister Sister.
That's us. Isn't this wonderful?
And Moesha.
You were supposed to wear your suit. Look like a gangster Urkel.
Weekdays starting at 10:30 a.m. Eastern on the Black Classics channel.
Now that's a good schedule.
On Pluto TV.
The music industry is roaring, as you know. There's never been a time in history where ticket demand has been higher than it is right now for live music. And there's never been a time in history where the supply of new artists is higher than it is today. Live music is the #1 leisure activity in the world.
And that was Venue CEO J.W. Roth speaking to us on Friday morning on the boom he's seeing in the music industry. Enter Cash or Trade. The fan-first social ticketing platform is leading the face value movement in ticketing. It's free from bots and scalpers, which artificially inflate prices. And here with more on how this business works is Brando Rich. He is Cash or Trade's CEO and co-founder. Great to see you in person with us.
Great, thanks for having me.
So that was my quick explanation, but take us into how this actually works. If I have a ticket to a concert, I bring it to your platform, and I can either get money or some other trade for it?
Yep, you can either sell it or you can trade it for another ticket. Before Cash or Trade is an app, it's a face value movement of fans coming together to buy, sell, and trade tickets at face value and to avoid scalping.
So how do you make money if it's face value?
So we have a escrow and insurance fee to help us protect all the tickets. And members also can become a gold member where they can avoid extra fees and purchase at cost.
What's the benefit of being a membership fee as opposed to just paying a transaction fee for each time you do make a purchase?
You gain a little bit more perks. You can reply right away to a post rather than waiting 10 minutes so you have the first dibs. But largely you can avoid any extra insurance costs and protection. You're just protected all year long.
So I want to go into your origin story because you're a big live music guy and you would travel the country attending live shows, including Phish, which is one of your favorite acts. And one of your frustrations was actually getting tickets. We all complain about the difficulty of accessing affordable tickets, but you went out and actually did something about it. What was your first step towards doing something about it?
Yeah, we were web designers. We got tired of seeing fans get ripped off, so we went on tour and set up a tent, and we actually had a bulletin board with Post-it notes.
A physical marketplace.
It's like our low-tech version. And everyone would come by and post up what they had for sale or for trade, and we would help them like safely trade tickets and avoid scalping. We took them out of the broker spotlight per se, and the Cash or Trade platform allows sellers to choose who they want to sell to. So the way that the flow works, it's not like a click and buy website. You can't really just go on there and buy up all the tickets. You really have to communicate with the buyer or the seller, and they make friends, they leave reviews.
Oh, okay.
That's interesting. And so how do you grow this business and scale up? Because obviously you're dependent on people bringing their tickets to your site and your platform. So do you spend a lot of time on marketing? Is that really how you get the word out?
Yeah, we are building the face value movement. There's members from 46 countries and from every state in the U.S. But largely, you know, there's this misconception that you can just run out on the scalper websites and make a bunch of money. And it's just not really that easy when you're paying 15% in commission fees, and then you see that your buyer may pay upwards of 35% just to purchase the ticket. And then you're competing with brokers who are sophisticated. Often people are just like, I just want to get my money back and pass it on to another fan who will enjoy the experience the way I would.
You know, some musicians, some bands have criticized Ticketmaster for their fees, their dynamic pricing. I'm thinking about Robert Smith of The Cure. Have you reached out to some of these artists who, you know, look at the current system and say there's something wrong with it? Have they reached out to you? Is there any conversation going on?
Yes, we're partnering with a number of artists who are kind of fed up with the industry as well, and they really want to protect their fans. So they're directing people to Cash or Trade as a way to stay out of the broker spotlight.
They're directing their fans, but they themselves are not getting involved with Cash or Trade, are they?
We have worked with some where they've moved ticket drops or pre-sales through our platform to keep it to real fans.
Right, right. And of course, because of your background, live music is really your forte. That's where you operate. But
yes.
How does this work with sports and sports teams that maybe, might want to put a swath of tickets available on your marketplace and, make it available at face value?
So we are building on our event database for sports. We've been primarily in live music, but the plan is to grow into sports as well. And then, as we work with events, mostly, they want to move tickets through the platform to keep it at face. But it's mostly an aftermarket platform than it is a primary. So it's really about when a fan can't attend anymore and they really just want to get their money back without sort of all the business dealings against brokers.
Right, and they don't want to deal with the vagaries of Craigslist, for instance. Right.
Yes, the sketchiness.
The sketchiness.
These are real fans with real reviews, a history, a profile, and there's a chat application so you can end up communicating directly with them and build some trust.
All right, Brando, really interesting stuff. Great to meet you and hear a bit about the business. That is Brando Rich from Cash or Trade. Meanwhile, we got to turn back to these markets because, again, we have a rally underway. The S&P 500 higher by about 0.4%, being led by big tech. The Nasdaq 100 higher by about 0.8%. What's remarkable to me is the volume right now. And the S&P 500 volume 47% higher than the 20-day average. A lot of people coming in and buying this dip and buying the dip in NVIDIA as well, Scarlett.
Yeah, although we have reached session highs and we've turned a little bit here, and volume is heavier than average. But for the Nasdaq, down 23% from the 20-day average.
Yeah.
So interesting.
That is
the volume burst is in the S&P 500 and more so in the Dow Industrials, which would seem to suggest that there's a lot of rotation going on here.
Yeah, absolutely. A lot of people sort of ripping up the script, similar to what we've done over the past 2 days. We'll continue to follow that. But we do have some movement under the hood as well. Let's get to some of the stocks moving this hour with Bloomberg's Isabel Lee.
Hey guys, I'm looking at AMD. It's kind of flat now, but edging lower. Maybe you can say 1%. The stock is downgraded to a hold by Melius Research. It says it sees earnings risk given the competition from NVIDIA. And the firm is also increasingly concerned that custom CPUs and NVIDIA CPUs will cannibalize even more of their server in the long run. And the firm has a 2-year price target of $129 for the stock. That was down from $160.
Okay, so some weakness in tech does continue. In terms of companies that rely on consumer spending, we know that cruise lines have done incredibly well, and we have another example of that today.
Yes, Royal Caribbean is popping 10%. The firm reported adjusted EPS that beat average estimates, and it extended its streak of profit beat. So the firm said its busiest booking period is off to a great start, and the busiest booking period is called the wave season, because wave season is when cruise promotions peak. This usually happens during the first quarter of the calendar year, and bookings have increased since their last earnings call, and the company is also launching a luxury river cruise. So
of course they are.
I'd like to do that.
Wave season brings its own outfits with it as well. People get cruising outfits.
Oh, really?
Yeah, they're into that.
I mean, I do love a theme. I'm not a participant in wave season, though, the ocean. I don't know, not a place to be. Anyway, let's talk about General Motors. Interesting, good results, but sort of glossing over the potential impact of tariffs.
Yes, it's going the opposite direction, down around 10%. So they did have a better than expected profit outlook, but concerns about tariff threats really is weighing on the stock. Adjusted earnings before interest and taxes this year will range from $13.7 billion to $15.7 billion. So GM previously said that the 2025 profit will be in line with last year's total. But we have Morgan Stanley noting that the forecast doesn't even account for any of the new policy on taxes. Bernstein said it was unsure that full-year guidance would provide much upside. So lukewarm there.
Yeah, the sell side really calling them out, and this move in shares. At one point, GM was down 9.9%. That was the worst move since March 2020. Not a superlative you love to see. Currently off by the most since November.
And worth noting as well that Ford shares are down about 3.2%. That company doesn't report earnings until next week, next Wednesday, but perhaps that gives some indication of what kind of forecast or not a forecast Ford might give.
Well, it's a good reminder, too, that these issues that we're talking about, it's an auto-wide industry sort of problem, not specific to GM, to Ford, or Stellantis, but all three of them. Isabel, great stuff as always. That, of course, is Bloomberg's Isabel Lee. Now, coming up, Starbucks turnaround plan gets its first real test when it releases results after the bell today. More on what to expect next. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
We are people living with AFib. And over 500,000 of us have left blood thinners behind for life. We've cut our stroke risk and said goodbye to our bleeding worry with the Watchman implant. We may be getting older, but we've never...